because people were not aware that major
Connection lost.
in large companies were taking place now on green hydrogen. That actually this pollution-free all the way to the supply chain fuel is now being transacted at multi-billion-dollar scale. If they'd known that, I don't believe any sovereign leader or any energy minister or climate change minister could not take ultra seriously that green hydrogen is now here to stay. It's broken through. History has been made. It will never go back.
Okay, what is the one thing that you would tell leaders today and business leaders? How do we transition faster than what we are now, because we're at real risk of missing our targets?
Oh, so that's really simple. You stop funding, you stop subsidizing, you stop
using
money into fossil fuels.
Right.
It could be carbon sequestration, it could be fuel rebates, could be anything. Hundreds of billions of dollars getting ashed while we ash the planet on fossil fuel subsidies. Because we haven't had that renewable electricity, we haven't had that green hydrogen, it's kind of been pushed down. It's all sorts of excuses. Oh, it'll never be commercial, it'll never be supplied in the quantities we needed, blah, blah, blah. Now we know, let's take action. It's practical, it's implementable, let's do it now.
Okay, if we do it now, is there going to be a shock to the energy system? Is there going to be a shock actually to economically? And is it worth, not talking about transition, just going from A to B?
Yeah, it's a fantastic question. A to B is the solution. Let fossil fuels do what fossil fuels do. Just burn their coal, burn their oil, burn the gas. At least they're pumping up carbon and methane into the atmosphere honestly. Well, not that honest because they don't measure methane, which is 90 times worse than carbon. But at least the carbon is being done honestly. Encourage the green hydrogen sector to come in really fast. Okay, it's there. There's renewable power all over the world. We now know how to make electrolyzers much cheaper, like 25% of the original cost. We know how to do that now. We don't have an excuse to get into it.
Does it need to be cheaper than oil and fossil fuel for it to be viable worldwide?
Well, right now it is. Okay, so let's just swallow that bit of financial data. Right now it is cheaper, and it's getting more cheap. It's the only fuel
Mr.
which is declining in value.
You don't have enough of it, right, to power the world?
Yes. That's only because we haven't had policies to support it. If we had policies to support it 5-10 years ago, it would be everywhere. You'd see the global warming budget start to come down. Now, we've got 5 or 10 years to make a huge difference. I need policy leaders all over the world to appreciate now, okay, big business is transacting with green hydrogen in multi-billion-dollar agreements. We now know it's here and it's here to stay. Let's spread it everywhere.
Coming up on the program, the hydrogen revolution. We'll speak with the CEO of Italian utility firm Snam about his new book and why he thinks green hydrogen will be competitive in just 5 years. Plus, how are airlines working to become more sustainable? We'll look at how Airbus plans to step up in the climate fight. This is Bloomberg Green. Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create the infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia's very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course, you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big, big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling costs of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy trading session. The S&P 500 index back in the green, barely up by less than 0.1%, higher by 3 points right now. The Dow is lower by 74 points, down 0.2%. The Nasdaq Composite Index holding on to a 61-point gain, up now by about 0.5%. 10 years up 25-30 seconds. The 10-year yield 3.06%. Spot gold down 0.6%, 18.26 the ounce, while West Texas Intermediate crude oil is down 1.3%, 104.78 a barrel. Keeping an eye on natural gas, nat gas down 7.7% right now, 633 per million BTUs. And Bitcoin up 2.3%, back above 20,311. S&P 500 index does remain higher after Fed Chair Jay Powell reiterated his unconditional pledge to fight inflation. Traders are also assessing growing odds of a hard landing for the U.S. economy. Sky-high gasoline prices are causing concerns about consumer spending. Lindsay Pieggs is chief economist at Stifel Nicolaus.
The easiest way to derail the American consumer is sustained heightened energy costs, which is exactly what we're seeing. So when consumers look at near $5 a gallon in terms of the price of gasoline, this is going to severely retard their ability to spend in other areas across the marketplace.
Shares of gun manufacturers surged after the U.S. Supreme Court established the right to carry firearms in New York. Smith & Wesson, for example, up now by 8.6%. Sturm Ruger is up by 3.9%. And Ammo Inc., POWW on the ticker, up by 3.1%. Among the names reporting after the close of trading today, we'll be hearing from FedEx. FedEx shares down now by 1.4%. Recapping, S&P up 2 points. I'm Charlie Pellet, and that is our Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Good afternoon, live from the Bloomberg Interactive Brokers Studio in New York. Good afternoon to our audience worldwide on radio and on YouTube. It's Bloomberg Business Week on this Thursday, June 23rd, 2022. I'm Tim Stenovic. Carol Masser is out today, but joining me this afternoon is Bloomberg News senior reporter and the host of ETF IQ on Bloomberg TV, Katie Greifeld. Katie, good afternoon.
Good afternoon, Tim. How are you?
I'm doing well. How are you?
I'm doing pretty good.
Good. Well, stocks bouncing around. This is Fed Chair Jay Powell wrapped up his second day of testimony on Capitol Hill. More from Michael McKee in just a moment. Then the Supreme Court striking down a New York law that could mean more guns in public places. We're going to have the latest on that. And the cover story of Bloomberg Business Week. Crypto's richest man is facing a looming regulatory crackdown in a brutal crypto winter. Katie, we're talking about CZ.
CZ. Can he survive the cold?
Well, that's the question. He's got $11 billion now, but that's down from close to $100 billion just a few months ago. We're also going to have a guest join us from Johns Hopkins University on the latest with COVID and monkeypox. And we're going to dive into what could happen to Juul now that the FDA has ordered the e-cigs off the market. We do that with the woman who literally wrote the book on Juul. All that and more over the next 3 hours. First up, let's get to the Market Drivers Report. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. With us now this afternoon in the Bloomberg Interactive Brokers Studio is Michael McKee. He's international economics and policy correspondent for Bloomberg News. Mike, good to see you. I know it's been a very busy day for you, a busy couple of days, given Fed Chair Powell has been on Capitol Hill. He wrapped up that testimony about an hour ago to the House Financial Services Committee. Anything new?
No.
All right, that's it. Interview over.
I said this would be the shortest interview in the world. There isn't much more to say because they moved the hearings up. They're usually in July, these formerly known as Humphrey Hawkins hearings. And Jay Powell gave a news conference last week, and the Fed put out a decision last week. And so nothing has really changed in the 7 days since he had appeared on camera. He made the obvious points that the Fed is committed to bringing down inflation, that it won't be easy, that they think there's a path to a softish landing, but it will be a rocky road to get there. And they're going to be as careful as possible to try to limit the damage to the economy.
So if that's the case, nothing new. I mean, I'm just looking at an incredible bid into short-dated treasuries. I see the 2-year yield down 6 basis points or so. That's after it was down 14 basis points yesterday. Usually you see that and you say, okay, maybe some Fed official said something that was a little bit dovish. Did we get anything to justify this move today?
You know, it's kind of hard to say. I was just talking with Rick Rader of BlackRock, and he said, wow, interesting markets today. I said, yeah, you guys had to, we thought we had a calm day. You had to mess it up. We did have Mickey Bowman, who's a governor on the Fed board, come out and say she supported a 75 basis point move. No real surprise in that if that's what Jay Powell wanted, that's what she would do. But the fact that she comes out and says it in advance, she joins a chorus of Fed officials who've done that, maybe is driving some of the thinking. But there seems to be a generalized view that we have now gone from worrying about inflation to worrying about recession. And in that case, you would expect rates to go down. I don't think that we're going to continue that path. Otherwise, things would get a little ridiculous. But it does show that the markets are trying to figure this out as the Fed is.
One area that I thought was notable yesterday in front of the Senate, Mike, was the idea that it turned pretty political pretty quickly, and you had both Democrats and Republicans.
Shocked that politics played up on Capitol Hill.
Senator Elizabeth Warren's comments from yesterday stick out to me. We heard those a lot yesterday, replayed, and again, these lawmakers know how to create sound bites. Did we see something similar from the House today?
Worse.
Really?
Much worse. Most of the hearing was spent ping-ponging between Republicans and Democrats. Republicans who wanted Jay Powell to say it was all Joe Biden's fault, and Democrats who wanted Jay Powell to say we're not going to keep raising rates significantly because it will hurt the poor. So both sides were playing politics, and Powell was doing his best to go straight down the middle and not comment.
Was there any moment that you felt that Powell, like yesterday, sort of contradicted the president's narrative about Putin's price hike?
No.
Because that stuck out to me yesterday.
Well, what Powell is trying to say is that there's a lot that's out of the Fed's control. And certainly the war is contributing to all of this. And maybe the stimulus package did contribute some as well. And COVID has contributed a whole lot. And it's hard to tease out the percentage of each that has influenced things on a timing basis. Obviously, the war is the newest thing. So, the president is looking to deflect blame as well. And it's not that he's wrong, but it's not the whole story.
And so, okay, we're finally through the congressional testimonies. We had both the House and the Senate. It's finally over. Not that I don't love this exercise that we do twice a year. What do we look for now? I mean, what is the next major point of Fed speak, of data that we should be watching?
Well, there's going to be a bunch of minor indicators that will play into market psychology tomorrow. The University of Michigan numbers come out, the sentiment numbers. We know people feel lousy about the economy, but the thing that made the Fed move 75 basis points was people's expectations for longer-term inflation.
That was surprising, right?
Yes, and that was in the preliminary Michigan report. This is the final one for the month. Did it change at all in the last 2 weeks? That'll be an interesting question because gas prices kept going up during that time period. And at the end of next week, we get consumer spending. And that's important because retail sales fell, but retail sales are goods, and the consumer spending numbers are goods and services. So we'll see if it was a shift to services from goods or if people are just stopping spending.
20 seconds, Mike. Stress test for banks later today. What do we need to know?
My guess is it's going to be like Lake Wobegon. All the children are exceptional.
Above average.
because the banks have been working on this for years. And today, Powell was asked about it and said they're all in good shape.
All right, good Garrison Keillor reference, appreciated. Michael McKee, international economics and policy correspondent for Bloomberg News, joining us live in the Bloomberg Interactive Brokers studio. Mike, really appreciate you taking the time on a day when I know you've been busy with the Fed and all the economic data that we got early this morning. To Washington, D.C. we go for a check of world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Thanks, Tim. The Supreme Court has struck down a New York gun law that required a concealed carry license. The ruling is expected to directly impact half a dozen other populous states. Bloomberg Supreme Court reporter Greg Storr on the significance of today's ruling.
Unquestionably the biggest Second Amendment ruling in more than a decade from this court, which had been a little reluctant to wade back into the issue until those three Trump appointees shored up the conservative wing of the court. It extends the Second Amendment beyond the home, which is where the court had said previously it applies, and it says that even when you are out in public, there are strong constitutional protections and limits to what the government can say about what weapons you carry.
Bloomberg's Greg Storr says all three liberal justices dissented. President Biden's signature infrastructure law is feeling the strains of inflation.
Historic inflation and labor shortages now threaten to hamstring one of the administration's signature successes. States across the country are seeing project bids come in as much as 30% above their original expectations from 7 months ago when President Biden signed the $1 trillion infrastructure law, which lawmakers were hoping to tout in their re-election campaigns. Inflation has forced delayed Buy America requirements and a push to build up the workforce. In Washington, I'm Amy Morris, Bloomberg Radio.
As a fifth hearing by the House January 6th committee gets underway later this afternoon with a focus on the Justice Department, the Associated Press is reporting that federal agents have searched the home of Jeffrey Clark, who worked in the Justice Department during the Trump administration and pushed to overturn the election. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld. We are live in the Bloomberg Interactive Brokers studio in New York. Katie, we are talking a little bit about COVID in just a few minutes. We're going to be joined by Amish Adalja at the Johns Hopkins Center for Health Security at Johns Hopkins Bloomberg School of Public Health. First, though, I want to talk a little bit about what's going on here in New York City when it comes to COVID. A story on the terminal that's among the most read is about how Mayor Eric Adams has not been enforcing his private sector vaccine mandate. New York City hasn't been enforcing the rule that mandates that private businesses require employees to be vaccinated against COVID-19, and a spokesman for Mayor Eric Adams said the administration has no plans to start doing so.
So this rule, it had been one of the strictest, it is one of the strictest in the U.S. It was implemented during the final month of Mayor Bill de Blasio's administration. And at the time, I mean, businesses had said that this mandate would be difficult to enforce. It could lead to worker shortages. And it looks like it hasn't even been enforced. So here we go.
Yeah, the rule went into effect back on December 27th. Now, at the time, city data showed that only 31% of 3,025 businesses inspected were complying with the order. The requirement applies to roughly 184,000 businesses with operations in the city. With the rule still on the books, New York City is the only jurisdiction in the U.S. with an active vaccine mandate for private employers. We should note that some of that data coming from Newsday, according to a spokesperson, Fabian Levy, for Eric Adams.
So this is interesting because sort of the lax enforcement that you're seeing in the private sector when it comes to the mandate, if you compare that to the public sector, some employees, including police officers, teachers, and sanitation workers, they've actually been fired for failure to comply with the vaccination requirement. So big difference there between private and public.
Yeah, I'm looking forward to speaking with Amish Adalja in just a few minutes, get his take. I haven't spoken to him in a few months about where we are in the pandemic, which numbers we should be focused on. And then also you mentioned Mayor Bill de Blasio, the former mayor of New York City. He's actually going to be joining us on air at 3:08 Wall Street time, so be sure to tune in for that interview. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are wavering, all about the Fed speak. Treasuries are rallying as weaker than forecast data and a renewed hawkish tone from Federal Reserve officials ratchets up worries that the U.S. economy is heading for a recession. S&P 500 index swinging between gains and losses. Right now, the S&P is higher by 4 points, up by about 0.1%. The Dow down 82, drop there of 0.3%. NASDAQ up 63, a gain there of 0.6%. 10 years up 27 30 seconds, 10-year yield 3.05%. Spot gold down $14 the ounce, down 0.8% to $18.23. And West Texas Intermediate crude down 1.4%, 104.73 a barrel. Can not ignore natural gas today, down 8.5%. Nike is leaving the Russian market entirely after suspending operations in March. Nike up 1.6%, and there is another round of job cuts at Netflix. So this time they're cutting 300 positions. Netflix shares are lower now by 0.5%. Recapping S&P holding on to a 2-point gain. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, here in the U.S., new daily COVID cases just shy of about 100,000. You know, you might have seen on Twitter that Carol Masters got it. That's why she's out. My brother's got it. He texted me last night.
Really?
Yeah.
Oh, I'm sorry to hear that.
Yeah, Michael, he also tweeted about it, too. You might have missed that tweet,
I missed
Katie.
that. Yeah, I do follow him.
You do follow him, I know. Still, though, it's down 13% over the last 2 weeks. That's according to the New York Times. Should we even be counting COVID cases, especially when so many of the ones that people have aren't reported because, you know, they're taking them with Binax tests at home. Daily average right now, though, 30,000 hospitalizations, that also according to the New York Times. With us now is Dr. Amish Adalja, senior scholar and infectious disease physician at the Center for Health Security at the Johns Hopkins Bloomberg School of Public Health. The Johns Hopkins Bloomberg School of Public Health that is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Adalja joining this afternoon on the phone from Pittsburgh. Dr. Adalja, it's been a few months since we spoke. How are you?
I'm good. Thanks for having me back.
Yeah, thanks so much for joining us again. Should we even be counting cases? Do those numbers even make sense because there are so many home tests?
I don't think that we should be counting cases because, as you said, many of the cases are being diagnosed at home. They're not part of official numbers. And we're at a point now where we've seen a lot of decoupling or delinkage of cases from hospitalization, severe disease, and death, which is exactly where we want it to be. Remember, this is a virus that's never going to be eradicated. It's never going to be eliminated. We're always going to have ups and downs in cases. We're going to have hot spots. We're going to have new variants. The goal has always been to shift the cases to the mild spectrum to make it more like other respiratory viruses. We don't count influenza cases. We count influenza severe disease. And I think that's the paradigm we want to move forward with COVID.
Well, that's sort of what I'm wondering. At what point can we think about this as, you know, something similar to the flu rather than, you know, something as sort of dramatic as it's been thought of over the past 2 years, especially with that decoupling that you're talking about from hospitalizations?
I think that in general in the United States, we can think of it that way because if you look at the case fatality ratio, meaning what percentage of people die with COVID, it is now approaching seasonal influenza. There's still more people overall, the raw numbers, because more people are getting infected. But on a pound-for-pound basis, because of vaccines, because of monoclonal antibodies, because of antiviral therapy and pre-existing immunity, we do have this largely tamed, and we don't see it threatening hospital capacity any longer. I'm talking to you from a hospital right now. It's not something that is anything like it was in the past. And that's because of all the progress we've made with treating this. So I do think that in the United States, we can think of it in that manner.
Dr. Adalja, one of the reasons that I like speaking to you about this is because you tend to present this in a really realistic way with how people live their lifestyles and approaching it from a harm reduction standpoint, which is a lot of the work that you've done historically, even before the COVID pandemic, was something we were talking about. I'm wondering how we should all be living our lives right now, because it certainly seems like in some places, you know, masks are still required at physical therapy. For example, this morning, it's a healthcare facility, so I'm required to wear a mask there along with everybody else who's there. But at so many other places, they're not. How should we be living our lives right now?
I think it's not going to be one size fits all. Each person has their own individual risk tolerances and their own individual risks for severe disease. But what I think is important for everyone to understand is that there's really never going to be a time when we're at COVID zero. The post-pandemic world is never going to be 2019. It's always going to be a world in which there's a baseline number of COVID-19 cases, hospitalizations, and deaths. There's no way to get the COVID risk down to zero. You can't magically put it into bats. So people have to learn how to risk calculate. And that may be different for different people, and it should be different for different people. If you're an 80-year-old person, it's going to be very different than if you're an 18-year-old person. That's what we have to allow people to do and teach them how to do that. I think with masks, that's one area where some people feel comfortable wearing a mask. Some people don't want to wear a mask. There's certain venues that want masks, and I think healthcare facilities are a little bit special and probably will continue to have masks, especially with patient contact because of the vulnerability of the people in a hospital setting. But in general, I think we have to learn how to acclimatize to it, and each person is going to acclimatize to it differently.
One area where I see the comparison between seasonal influenza and where we are with COVID breakdown is when it comes to long COVID, because you don't really hear about people, and correct me if I'm wrong, Dr. Adalja, you don't really hear about people having long-term effects from the seasonal flu. And one reason why I still try to avoid getting COVID is because I've seen colleagues and friends with long COVID symptoms. What do you say to that?
Well, I think long COVID is one area where we need to know a lot more before we can really say anything definitively. We don't really even agree on the definition. You have to really separate people that are hospitalized, especially those that were in the ICU, from people that just had an uncomplicated outpatient illness. And I think we really need to understand why it occurs and who it occurs in. What we do know is that it's less likely to occur in vaccinated individuals. And I think that's one thing that people can kind of take home about long COVID, and that people get better over time. But when you look at some of the percentages in some of the studies, maybe they say 30% of people or 50% of people have long COVID. Most of those studies don't have control groups. So we don't even have rigorous studies. I think it probably will come down to 5 to 10%, probably closer to 5% when you actually look at rigorous studies, looking at symptoms that actually interfere with people's activities of daily living, and subtract out people who are hospitalized, because there's definitely phenomena like post-hospital syndrome and post-ICU syndrome that are completely distinct and do occur with any type of hospital admission or any kind of ICU admission. But I think it is one variable, and I think we have to learn more about it, but I don't think it should be something that completely derails our ability to get back to normal.
Dr. Amish Adalja, senior scholar and infectious disease physician from the Bloomberg School of Public Health. It is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. A quick headline: Ukraine wins candidate status in a bid to gain EU membership.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in the Bloomberg Interactive Broker Studio in New York. Katie, I'm just pulling up SWBI US on the Bloomberg terminal. That's the ticker for Smith & Wesson Brands. It's higher by more than 9% as we speak. In fact, many gun manufacturers are surging today. This after the U.S. Supreme Court established the right to carry firearms in New York. So what that could mean is more guns in more public places, and shareholders essentially saying, well, that could mean more guns sold. We're going to talk about the legal implications with June Grasso in just a few minutes, and then a little later in the program, we'll hear from former Mayor Bill de Blasio. First, though, let's check in with Charlie Pellet because we got less than a half hour to go. Hey, Charlie.
Indeed, Dow just turning higher. You mentioned Smith & Wesson shares rallying 9%, but also some of the other gun makers. Sturm Ruger right now pushing higher by 3.9%, and Ammo Inc., it is up now by 3.5%. The Dow, the S&P, NASDAQ are all advancing. Treasuries are rallying as weaker than forecast data, and a renewed hawkish tone from Federal Reserve officials ratchets up worries the economy's heading for a recession. S&P up 14, a gain there of 0.4%. The Dow up 17, up 0.1%. 30,501, by the way, on the Dow. NASDAQ up 102, higher by 0.9%. 10-year yield 3.06%. Spot gold down 0.8%. 18.23 the ounce. West Texas Intermediate crude down 1.8%. 104.30 a barrel. And a headline from the Bloomberg Professional Service, Ukraine has won candidate status in a bid to gain EU membership. Crude oil and energy stocks moving lower again today as warnings about the economy grow steadily louder, overshadowing signals that the oil market remains tight. Gargi Chaudhary is head of iShares Investment Strategy Americas.
I think it makes sense for oil and energy sectors in the equity markets to have a little bit of a pullback. I certainly don't think that we're going to go back to sort of levels that we've seen in the past, like $60, $70, just because the demand-supply mismatch is so high. I think there's a structural reason that we all know that oil is going to be higher for some time. But I think pullbacks are actually healthy.
And today seeing a pullback for oil stocks. ExxonMobil down 3.6%. BP lower now by 3%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, you heard Charlie mention gun stocks moving higher in the wake of the U.S. Supreme Court decision establishing the right to carry firearms in New York. Well, earlier today, New York City Mayor Eric Adams made a public statement about this Supreme Court decision. Here's a portion of what the mayor had to say.
The opinion claims to be based on nation historical past, but does not account for the reality of today. It ignores the present, and it endangers our future.
That was New York City Mayor Eric Adams addressing the media earlier today. We've got a great voice to talk all about this. June Grasso is Bloomberg News legal analyst. She's also the host of Bloomberg Law. It's weeknights at 10 p.m. Wall Street time right here on Bloomberg Radio. June's with us now in the Bloomberg Interactive Broker Studio. June, help clear this up for me because I got to confess I'm a little confused here. We heard from the mayor's chief of police who said that, or the police commissioner, I should say, who said nothing changes here in New York City. But at the same time, my understanding with this decision is that there is a change and we could go out and get a gun at this point.
Well, you're both right, sort of.
Okay, the liberal arts answer. I like that.
How did you know? The Supreme Court said that New York's law, her current law, is unconstitutional, and that people under the Second Amendment have a right to carry a handgun in public. That doesn't mean there can't be laws restricting that right. So even in the concurring opinion, Justice Brett Kavanaugh, joined by the chief, said that you could still have licensing requirements for things like background checks, mental health records checks, training in firearms handling, and in laws regarding the use of force. So the governor said today that she's going to call a special session so that New York, the legislature, can get together and work on a new law. So this law doesn't work, and you can't go out right now and get a firearms permit based on, anyone can get it. But coming up in the future, we'll find out what the next law is. And as the mayor said, they're basing this, they're looking back, they're textualists, they're looking back at, they say, to determine whether a regulation is constitutional, look at the text of the Constitution and the history of our country. That puts a lot of laws in jeopardy, like red flag laws.
Okay.
The so-called boyfriend loophole, they weren't around. So there are a lot of questions after this opinion.
So this was a New York law. What are the implications for the rest of the U.S., though? Because, New York, one of at least 6 states that had a law like this.
Well, the rest of those laws would be unconstitutional if they were brought before a court, and you've got to believe that they would be. So those states will have to do what New York is going to do, which is try to pass a law that, in other words, those states are may carry states. You're allowed to have shall carry laws, so that have, that don't say, oh, it's, no one can get a gun except for self-defense, or you have to protect yourself, you have to show us why. You can't have that, but you can have, as I said, different kinds of restrictions, and the states will have to look at that and pass different kinds of laws. And then we'll go through the whole process. They'll go to court and be challenged, and then we'll see if they pass the rigors.
Help me understand what happens next week if we're sitting here talking about Roe v. Wade essentially being overturned and that being kicked to the states. So we have on the one hand the Supreme Court saying that states do not have a right to make their own gun laws, but on the other hand we're saying next week perhaps that states do have a right to make restrictive abortion laws.
Ironic. It just shows you that textualism, despite the fact that people say this means that everyone will interpret the Constitution based on the text and everyone will be the same, it shows you how things can come out differently based on textualism. Now, with the abortion, which we're expecting that they're going to overrule Roe v. Wade, if they do, the president has said that he's going to try to implement some executive actions, but none of those executive actions can bring back a constitutional right.
But don't you see some tension between these two decisions?
Oh yes, I do see tension between them. I think it's what. That's what I was saying about textualism. It's what we want to do at the moment. So in other words, you can find a different reason for anything, right? You and I could say, oh, it looks very blue outside. And then someone else can say, no, I think it looks grayish, and we can have a whole discussion about it. Well, that's what this is all about. And what people criticize this court for is the fact that they say they're very political and that they look at the outcome that they want and then they read everything to fit that outcome. And I think that's what's happening with abortion. They're saying, okay, the states can do it. Here they're saying, well, the states can do it, but, we have certain rules and regulations. So it is difficult to understand.
June, we only have 20 seconds left here. Help us understand how you're going to cover this tonight on Bloomberg Law.
I'm talking to one of the foremost experts on Second Amendment rights, Adam Winkler, out of UCLA Law School. We're going to talk about all the different ramifications, what kind of laws might work and what don't.
All right, looking forward to that. June Grasso, Bloomberg News legal analyst. Michael Bloomberg, the owner of Bloomberg LP, the parent company of Bloomberg News, is a founder and helps fund Every Town for Gun Safety. It's a nonprofit that advocates for gun violence prevention and other gun safety measures. To Nancy Lyons we go for World and National News. Hey, Nance.
Tim, you've been talking about it. The Supreme Court has struck down New York's limits on carrying concealed handguns in public. It is a landmark victory for gun rights advocates. But New York Governor Kathy Hochul says she's shocked by the ruling, especially with the rise in gun violence.
As governor of the state of New York, my number one priority is to keep New Yorkers safe. But today, the Supreme Court is sending us backwards in our efforts to protect families and prevent gun violence.
Governor Hochul says we do not need more guns on our streets. Michael Bloomberg, the founder and majority owner of Bloomberg LP, donates to groups that support gun control, including Every Town for Gun Safety, which submitted briefs in favor of the New York law. Well, while President Biden pushes for a 3-month break on the federal gas tax, his administration is looking for input from the oil industry. Amos Hochstein is the president's energy secretary envoy at the State Department.
Before we start talking about building new refineries, we can bring back potentially the old refineries that have been taken out of commission that are still there.
Amos Hochstein tells Bloomberg the Biden administration wants to ensure drivers' immediate needs are being met, even as the U.S. transitions to a cleaner energy future. Well, the Biden administration is proposing a dramatic overhaul of campus sexual assault rules. It wants to expand protections for LGBTQ students, bolster the rights of victims, and widen colleges' responsibilities in addressing sexual misconduct. The FDA, as expected, has ordered Juul to stop selling e-cigarettes in the U.S. and to pull current inventory off store shelves. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec along with Katie Greifeld. We are live in the Bloomberg Interactive Broker Studio in New York. Katie, a record-setting real estate transaction.
Tell me about it.
Okay, I will. It's among the most read on the Bloomberg terminal. We're talking about Larry Ellison added a $173 million oceanfront estate, this in Palm Beach County, to a sprawling...
Beautiful part of the world, I gotta say.
You do spend a lot of time there, right?
Oh, yeah.
Yeah, this is... the portfolio, it set a record for the most expensive residential sale in Florida. Okay, what do you get for $173 million in Palm Beach County?
Probably a lot. It looks like a Mediterranean-style main house, more than 62,000 square feet, several other buildings, which together have more than 30 bedrooms. Pretty nuts.
Okay, well, it's not his only purchase in Florida. He paid $80 million last year for a North Palm Beach mansion he intended to demolish, but made clear at the time that he intended to continue to be based on the Hawaiian island of Lanai, where he moved during the pandemic. He spent $300 million back in 2012 to buy 98% of the Hawaiian island's 90,000 acres and 2 Four Seasons resorts. He also owns homes in Malibu and the San Francisco Bay Area, among others. An Ellison spokeswoman declined to comment. I do want to give a plug for the recent Bloomberg Business Week cover story.
As you should.
All about Larry Ellison and his transformation over the last decade of Lanai.
And just for some context, Ellison, he's the 11th richest person in the world. He has an estimated net worth of more than $83 billion. That is according to the Bloomberg Billionaires Index. The previous Florida residential sale record was set last year by Tiger Global Management's Scott Schleifer. Did I say that right?
Yeah, I think so.
All right, nailed it.
He paid $122.7 million for a Palm Beach mansion. We should note, not the only Florida news today, Katie. We did learn that Ken Griffin is relocating the headquarters for his Citadel to Miami from Chicago. This is going to be a multi-year process.
Good luck, Miami in July.
Okay, good point. Air conditioning, right?
Mm-hmm.
You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Look, we do have the Dow, the S&P, and NASDAQ all advancing right now. Stocks have been wavering. Treasuries are rallying as weaker than forecast data and a renewed hawkish tone from Fed officials ratchet up worries the economy is heading for a recession. S&P right now up 13, a gain there of 0.4%. The Dow up 24, higher by 0.1%, and NASDAQ is up 102 now, higher by 0.9%. 10-year yield, 3.07%, 10-year up 22.30 seconds. Spot gold down $14 the ounce to $18.23, a drop of about 0.8%. West Texas Intermediate crude down 1.9%, 104.17 a barrel on WTI. Olive Garden operator Darden Restaurants reports fourth quarter sales that beat Wall Street expectations as consumers resume dining out, even as inflation eats into discretionary spending. Darden shares, they're lower now by 0.2%. Recapping, 10-year at 3.07%, S&P up 15, up 0.4. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, it's the biggest crypto exchange in the world, and it's run by crypto's richest man, Changpeng Zhao. He's also known as CZ, if you've been paying attention to crypto over the last couple of years. Just a few months ago, he was worth $96 billion. Now he's down to about $11 billion. That's according to the Bloomberg Billionaires Index. Oh yeah, he drives a Toyota minivan. Now, though, he's facing a looming regulatory crackdown in a brutal crypto winter. It is the subject of the cover of Bloomberg Business Week. It's available now on newsstands, on the Bloomberg terminal, and at Bloomberg.com. The story written by Max Chafkin. He's a columnist at Bloomberg Business Week. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. Also joining us, the co-author of the story, Justina Lee. She's a markets reporter for Bloomberg News. She joins us on the phone from London. Justina, I want to start with you. I know you spent a lot of time reporting out this story. It is just a fantastic profile of not just CZ and Binance, but also of the challenges that the company faces. And we learned a lot of new information here. I mean, if it even is fair to call it a company at this point. We'll get to that in a minute. But for people who aren't familiar with CZ, who is he?
Yes, CZ is the billionaire co-founder of the world's biggest crypto exchange. I think for a lot of people who haven't been paying attention to crypto might not really understand exactly how big Binance is. But, you know, in the past 24 hours, I think they usually say they processed $76 billion of transactions. And if you think about Coinbase as the exchange that most Americans are most familiar with, I mean, Binance is like, I think the last time I looked, about 40 times bigger than that. And that's because they have a lot of volumes in crypto derivatives.
Wow.
And that's because, you know, they're everywhere and they're really the retail trader's favorite crypto exchange.
And Max, you went to Dubai. You met the man. What was he like in person? Because he is sort of this mysterious but very prolific figure.
Well, yeah, and as Justine is saying, I mean, Binance itself is popular, and CZ, has this kind of like cult following. The crypto heads really like the company, and they really like him. I mean, in person, he's very unassuming, right? He doesn't come off as a kind of what you would think of as a normal crypto billionaire. He drives a normal seeming car, or is driven, I probably should say, in a normal seeming car. He's a slender, soft-spoken, and so on. But of course, this is all part of a pitch. And what Justine and I wrote about in this story is that Binance, basically after years of really kind of behaving, very aggressively in terms of regulation, in terms of its approach to the law, is very much trying to strike a new note, which is a note of we are, as CZ told me in Dubai, we're the stable guys. We're the adults in the room. And to people who follow this industry, I mean, that is a bold claim, to say the least.
Stable's a bit of a dirty word in crypto right now.
Yeah, and as Justina can speak to, I mean, this is not a company known for a lot of stability.
Okay, Justina, come on back in here. I'm not going to say the word because it's not allowed on radio, but I'll just say S coins, okay? S coins. People who know crypto know what I'm talking about here. What is Binance's relationship with these so-called S coins? And explain what they are.
Yeah, I mean, these S-coins, or we can call them altcoins, are basically these smaller cryptocurrencies that got really big in the ICO boom of 2017. And the relationship with Binance is that one thing they realized in 2017 was that people didn't just want to trade Bitcoin and Ethereum. They wanted to trade, like hundreds of tokens that are, that different people are pumping on the internet. And that was really how they first got big back then.
And so Binance is interesting because it's kind of jurisdiction free. Max, CZ is kind of jurisdiction free as well. How is that so? How is he able to do that?
Well, yeah. So the company was founded in China, but pretty quickly after they were founded, they basically went on the move. And what you have is this website, Binance.com, where most of the trading volume is, that doesn't really have a home. And there isn't a clear country, there isn't a clear jurisdiction. And that is basically both a feature and a bug. It's a bug because it's a regulatory vulnerability. You now have sort of regulators all over the world, and especially in the United States, scrutinizing this company very closely. But it's a feature in that it basically allowed them to offer all of these unlicensed financial products in enormous volumes, with very few repercussions. And so, and that's why this company in a lot of ways embodies the crypto industry itself, because of course crypto is this, borderless, nationless idea, right? And then we have this borderless, nationless company. And what we're seeing now is the potential for those ideas to maybe run into, some of those old institutions that they were trying to displace.
Justina, as I mentioned at the top here, a lot of stuff you and Max uncovered new in this. And one part of that I want to get to is the ownership structure of different Binance arms throughout the world. Yesterday I reported on Binance US, the US arm dropping its crypto trading fees. What is Binance US? How is it related to Binance? And what did you learn about this intricate web of different firms throughout the world?
Right. So Binance US started in 2019 because, US regulators wouldn't really have Binance in the country. And so Binance was like, we'll start this brand new entity that's going to be independent and it's going to be more compliant. For instance, they have far fewer S-coins than the global exchange does. And so that's sort of been, I would say, quite a successful narrative so far. And that's sort of the way they've been operating, which is that they have this ambiguous entity, Binance.com. But, in some local jurisdictions, they might open a local company that might engage with regulators. And the question kind of behind all this is, who actually owns this cash cow? And it's quite mysterious because, as we've said, we don't know the parent company behind Binance.com. But if you look at the local entities and a very important company called Binance Capital Management in British Virgin Islands, which have done a lot of acquisitions for them, I mean, they're basically entirely owned by CZ, which kind of suggests that the company doesn't have any external shareholders. And it's quite interesting given that crypto has always been about decentralization, because at least in the financial sense, Binance is not decentralized at all.
All right. Well, this is the cover story of Bloomberg Business Week this week. It's available in a new issue. It's on newsstands now. It's on the Bloomberg terminal, and it's available at Bloomberg.com. Crypto's richest man faces regulatory crackdown, brutal winter. The story written by Justina Lee. She is markets reporter for Bloomberg News. Also, Max Chafkin, columnist at Bloomberg Business Week. He's also the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. Well, we are just a little less than a half hour away from the close of trading here. Don't go anywhere, though, because in just a couple minutes, we're going to be joined by our friends at Bloomberg TV for our countdown to the close. You're listening to Bloomberg Business Week on Bloomberg Radio.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading session. Romain Bostic, Sonali Basak, and Taylor Riggs. We're joined right now by our colleagues Tim Stenovic and Katie Greifeld. We welcome our audiences across Bloomberg, television, radio, as well as on YouTube. Another wild day here, Tim, where a lot of folks really are trying to game this idea of whether we're heading into a recession or not, and whether the Fed actually has this potentially under control.
Yeah, really parsing through those comments today from Fed Chair Jay Powell, day 2 of testimony on Capitol Hill. Hey, I just looked up and saw that former New York City Mayor Bill de Blasio was on your air talking about the Supreme Court decision. Made me think of gun stocks today because it's one of the areas of the market that is seeing outsized gains today. Smith & Wesson in particular higher by more than 9%. This after the U.S. Supreme Court established the right to carry firearms in New York. New York just one of at least 6 states. Others include California, New Jersey, and others. So what this could mean is more guns in more public places, and investors essentially saying, well, that could mean more guns sold, which could be something for Smith & Wesson and Vista Outdoors and Ammo Inc.
Yeah, that does make logical sense that you would see gun stocks higher today. You're seeing stocks broadly higher right now, though. Not the case earlier this morning. What caught my eye, though, was that Bitcoin kind of led the way here. Bitcoin somehow has been higher all day, sort of, again, leading stocks, which we haven't seen in a while.
Well, still stuck around that 20,000 level. Stocks have been moving back and forth from gains to losses and back to gains again. The S&P right now up about 0.3%. The Dow Jones Industrial Average really just trying to poke its nose above the waterline right now. Call it unched on the day. NASDAQ Composite up about 0.9%, and the Russell higher by about 0.4%. Sonali.
Yeah, let's get into the S&P a little bit because it's not like everything is in the red at all. Energy is down more than 4.6% though, Romain. A nice little drop there. And materials as well, less than 2%. But what's up on the day? You have utilities up more than 2%. Healthcare almost 2%. Consumer staples also catching a bit today.
Yeah, and you're looking at some of those tech stocks getting a nice little bit. Apple higher here on the day. I thought there was some interesting commentary by out of the folks over at Bank of America, Global Research. They actually downgraded Robert Half International. Those shares are down 6%. This is a big temporary staffing company. And the analysts talked about this idea that they really think that a lot of the labor market conditions might have actually peaked. And they're saying that companies that sort of traffic and staffing like Robert Half could actually be hurt by all this. I also want to turn your attention real quickly here to Chevron. We have some headlines crossing the wire right now. Remember, Chevron and a bunch of other energy CEOs were meeting with the Secretary of Energy, Jennifer Granholm, today at the White House. The Chevron CEO, Mike Wirth, did put out a statement saying that the meeting was, in his words, constructive, and he says it's an important step towards energy security. Granholm also commenting, saying that she is urging oil refiners to boost capacity to cut prices.
We talk a lot about oil, energy, Romain, and I think one thing this really brings up for me is if we've had already peak inflation and peak break-evens. And I know that I've been talking a lot about this, Tim, in the last few weeks or so. The big, huge move higher in nominal yields has been from tightening real yields, even as some of these break-evens and some of these inflationary measures have started to roll over as well. This could be sort of a relieving sign for the Federal Reserve. I know he spoke a lot, that Chair Jay Powell, about inflation, and really hoping that if it stays unanchored, the longer it does that, the more problematic things are for him.
Well, let's go to what he had to say when he testified in front of the House Financial Services Committee earlier today. Here's Fed Chair Jay Powell, and as you mentioned, Taylor, he struck a familiar refrain here. Check it out.
It's unconditional, our commitment is, and the reason is that we need to, in a particular situation, we have a labor market that's sort of unsustainably hot, and we're very far from our inflation target. We really need to restore price stability, get inflation back down to 2%, because without that, we're not going to be able to have a sustained period of maximum employment.
Yeah. Well, there you have it. Fed Chair Jay Powell on Capitol Hill again earlier today. When do we start to see that, Katie? When do we start to see the unemployment rate here actually go up? And some of the work that Fed Chair Jay Powell has talked about doing in order to get that. And look, he doesn't want to put people out of work, but at the same time, he kind of does, given that the labor market is so tight.
I mean, it feels inevitable that that's what would follow, and the headlines that we've gotten this week about layoffs certainly seems to fit that. It is interesting to look at today's market action in the wake of Powell's comments, because that was not a dovish Fed chair, and yet if you look at the front end of the Treasury curve, big bid going into short-dated Treasuries. I don't know. It feels totally disconnected.
Yeah, it's fascinating. You have this very smart story on the terminal by Edward Bolingbroke talking about piling into hedges, traders piling into hedges about a rate cut if we head into a recession. But, you know, the near-term outlook still is quite dire when you're looking at what the market is looking at.
And there's a lot of questions, I guess, about the recession signals. You mentioned layoffs. I think, Taylor, you were flagging this a little bit earlier, how there was a report out of Variety that Netflix had laid off about 300 people. And we've sort of seen the small drip, drip, drip. These aren't mass layoffs, maybe that we would have seen in past cycles. But the fact that you're seeing this sort of persistent across the board and hiring freezes certainly cause for concern. And when you look, Tim, at what we've seen in the commodity space and the come down there and the concerns about demand, you have to wonder if the recession is already upon us and just nobody even realizes it.
The markets are forward-looking, Tim,
Yeah.
and we've talked a lot about this sustained rally that started Friday. We bottomed out last Friday, I believe, at about a 36.74. Some big buying sort of coming into this week, and that's really what I think investors are looking for. If these markets are forward-looking, how are the buyers coming in, and are they committed to these markets?
Okay, well, you heard the news from United Airlines earlier today. They're reducing service temporarily at Newark, and they're saying this is to reduce delays. They're not saying it's staffing related, but we know that the airlines are having staffing issues. So there's this imbalance here. And I guess what I'm saying is if you have 300 people laid off at Netflix, a few hundred laid off at JP Morgan, it's not like they're going to go and work for the airlines, or they're going to go and work, you know, necessarily as servers at a restaurant that is having trouble attracting and retaining employees. So there still could be this imbalance, even if we start to see layoffs at some of these companies.
Yeah, and that doesn't seem like that's good. I mean, I'm no economist by training,
Right.
but I don't think that's good. And the other thing too, Katie, I mean, just to get to this idea here that these imbalances aren't new. We've been dealing with this now for more than 2 years, really, if you really want to kind of just put it in perspective.
Exactly.
And no one seems to have a response. There's no monetary policy response. There's no fiscal response. And the market's just doing what it can and trying to make money until, I guess, the party's over.
And that was a point of conversation in Powell's testimonies today, is that the Fed has these famously blunt tools. He's acknowledged that they don't work precisely. There's no precision here.
Yeah.
You just have to sort of wait for this lag to run out.
How many people do you have on staff to take care of your horse?
Wow.
I think we have to go.
Coming out
right, Tim?
swinging.
Okay.
I think
I'm just saying, you're an employer. I mean, you know, you're keeping somebody employed, right?
That's true. That's true. I am stimulating the economy.
Which
in a
horse,
sense.
though? That's the question.
Oh, okay.
We
have
got to
to
go. All right, that is going to do it for our cross-platform coverage of our countdown to the close. We are going to be back here in just about an hour. We're going to chat more with the team at Bloomberg TV.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld. Katie, I'm sorry.
Why?
Was that mean?
No.
I feel so bad.
No, it's
just
fine.
piling it on.
No, it's fine. I am just trying to contribute to the local economy, keep people employed, buy hay, grain, etc.
Yeah, exactly. And you know what? I guess if you tweet about it, it's fair game.
I do often tweet about the horses.
And I kind of have a soft spot for Gus and for Batman.
Yes, yeah, they're just nice guys.
Beautiful animals.
Yeah, truly inspiring.
Inspiring. I have no good way to actually transition to our next guest.
Let's
because
do it.
we're going and we're talking politics. We're talking about the Supreme Court, and we're talking about exactly what New York City and New York State is going to do. In just a few minutes, we're going to be joined by the former mayor of New York City, Bill de Blasio, who's going to be with us to talk about what the city's reaction should be and what the state can do in the wake of this Supreme Court decision. In the meantime, Katie, I want to take a look at the markets, get an understanding of where we are with less than an hour to go in trading here. We are seeing the S&P 500 higher right now. For much of the day, it was struggling for direction, but it's up by more than 0.5% right now. The Dow Jones Industrial Average higher by 0.2%. The NASDAQ, though, leading the way, higher by more than 1.2%. Katie, I know you've got your eye on the bond market. What's it telling us about today's trade?
You know, it's a real head scratcher. I think it's really interesting, again, to see this sort of bid into short-dated treasuries. Usually you would see that when you had sort of dovish noises coming from the Federal Reserve. Not what we got today. So, again, a bit of a head scratcher.
Yeah, you got a great story on the Bloomberg terminal all about this. I encourage everyone to check it out. Did you tweet it? Is it on the other side of the terminal? It's live?
I did retweet someone else mentioning me.
Okay, be sure to check that one out. Once again, I mentioned that the Dow is higher by more than 0.1%, the S&P 500 by 0.5 percentage point, and the NASDAQ higher by 1.2%. We think back to what we heard from Fed Chair Jay Powell a little earlier in the day. As our own Mike McKee, the international economics and policy correspondent here at Bloomberg News, He said, well, nothing new. And that's because we heard from the Fed chair a little over a week ago with that press conference. And then we heard again from him on Friday about his commitment to getting inflation back down to 2%. And his comments, his actually prepared testimony was the same yesterday as it was earlier today. Politically, it was a little different in the House today than it was in the Senate. But for the most part, nothing new.
I guess what's interesting, if I had to think back to yesterday and today, which were, again, the same, it was, I mean, you're never going to hear a Fed chair forecast a recession. That's just never going to happen. He got pretty close, though, and to hear his comments on a soft landing sounded like that is a distant dream, probably going to be very difficult to achieve.
Well, speaking of something that's difficult to achieve, I think a lot of heads of cities around the country are in a tough place right now, given that the Supreme Court has opened a path to more guns in public in big U.S. cities. Today, a divided Supreme Court striking down a New York law that limited who could carry a handgun in public, issuing a landmark ruling that could mean more guns on the streets of big cities, even as officials vowed to try to limit the impact. Joining us now is the former mayor of New York City, Bill de Blasio. He joins us from New York City. Mayor de Blasio, it's good to have you with us. Your reaction when you saw earlier today at 10:31 the Supreme Court voiding New York State's gun limits.
I just felt like we immediately were a less safe city and a less safe nation. I just felt like, something that was actually helping us to stop gun violence was ripped away from us. And I don't understand how the Supreme Court could possibly want to make this a more dangerous city, but that's exactly what they did. And I'll tell you, our law enforcement officials for decades have believed this kind of approach, these strong gun safety laws, are particularly important in a place like New York. And the Supreme Court just really spit in the face of law enforcement, just making it easier for guns to be out in public, where unquestionably that will lead to more violence.
Well, I'd love to hear your thoughts on where you think New York City goes from here, because we heard from current Mayor Eric Adams saying that, considering laws that would restrict open carry in sensitive places. When it comes to New York City, where do you think those places might be, for example?
The subway is an obvious example. It's the last place anyone should be able to carry a gun out in the open. Hospitals, any place where there's national security ramifications. Obviously, the World Trade Center area, the UN, there's a lot of arguments that can be made, and I think they will pass legal muster, that we still have rights to restrict selectively. But what's shocking here is the Supreme Court it's literally become extremist. It's out of touch with the American people. As you've seen from the recent polling, especially after Uvalde, more and more Americans want tougher and tougher gun safety laws. And the court is bent on literally going in the opposite direction from the vast majority of the American people. And it's very dangerous. But this city, and I agree with Mayor Adams, should look for every possible exception that we can use to keep people safe here.
Mayor de Blasio, what does this mean for the city's law enforcement? The men and women in uniform who are essentially part of their job is getting the guns off the streets here in New York City. How does this make their job more difficult?
It's made the job of our police officers much more difficult. It's put them in harm's way. The Supreme Court has literally put our police officers in danger. And, the police leaders I worked with were adamant when we were trying to find a way to stop this, and we knew we were dealing with an extremist court at this point. The PD officials were adamant that officers are going to bear the brunt of this. If there's more guns out in public, it will lead to more conflicts, more sudden violence. These guns also, even legal guns, get stolen and used illegally. We all know about crimes of passion, and those will be much more likely if guns are in evidence. It's essentially an incendiary act to walk around with a gun out in the open in a place like New York City. So this has made everyone less safe, but particularly our law enforcement officers less safe. It's absolutely unacceptable. To me, it's mind-boggling.
So I wonder how you're
do this.
I wonder how you're interpreting this to the extent of, I walked by a school this morning, for example, and it said that on the outside that it was a gun-free zone. Would the city or would the state be able to establish the subway, banks, hospitals, different buildings, offices perhaps, as gun-free zones, or would that fly in the face of this ruling?
Well, we should do it and let someone try and stop us. I really think this is the key. In a constitutional system, localities and states have a lot of rights. And we certainly have the right to make our own laws, and we should pass these new laws. We should enforce them. And then if someone wants to try and take us to court again, we'll play that out. But right now, everything that can be done to create safety, particularly around our schools after Uvalde. I mean, this is just, what a juxtaposition. We lose children and teachers. And remember, that was someone with a legal gun doing that, killing all those people in cold blood. And now the Supreme Court says you could have more legal guns out in the open. I mean, it is dangerous. And so we should take every measure we can and then let someone at the federal level try and stop us.
We're speaking with former New York City Mayor Bill de Blasio. He joins us from New York.
And if we look at this ruling from the Supreme Court, it says that the majority opinion said that there is no historical basis for New York to effectively declare the island of Manhattan a sensitive place simply because it's crowded and protected generally by the New York City Police Department. I mean, taking that, what are some of the ways that New York and Manhattan and the police departments could get around that stipulation?
Look, I think that's an outrageous stipulation, and that says to me, and obviously my hope is to join the U.S. Congress and legislate, because that's the one way you stop an extremist Supreme Court, is you create new laws within the Constitution, and it's quite clear, not just New York City, many cities, many places are sensitive in this country, and isn't the fundamental job of government to protect lives? So I'm going to go and fight for that. I think people all over the country are going to fight for it. We have to legislate our way around it. And another thing we need to do is expand the Supreme Court. Once upon a time, it might have sounded outlandish, but this court literally has decided to take an extremist path, absolutely unwilling to listen to not only American public opinion, but to the facts on the ground in so much of America. Most Americans live in urban areas. Most Americans, and particularly parents, are scared to death of gun violence. The last thing they want to see is, a constitution written in the 1780s used as an excuse to make it easier for people to carry guns in the 2020s and put their children in danger. So, we've got to legislate. We've got to organize. I think the amazing activism you saw with March for Our Lives, and you're going to see a lot more of it in the months ahead. We cannot take this lying down, and it's absolutely out of touch. Again, I respect the Constitution deeply, but in the 1780s, no one could have foreseen a city of 9 million people, packed tight, needing the kind of security measures that keep people safe, which the NYPD has done successfully for decades. And now law enforcement is being robbed of one of the things that keeps them safe and us safe.
Former New York City Mayor Bill de Blasio joining us this afternoon live from New York City. Mayor de Blasio, thank you so much for taking the time. We should note that Michael Bloomberg, owner of Bloomberg LP, the parent company of Bloomberg News, is a founder and and helps fund Everytown for Gun Safety. This is a nonprofit that advocates for gun violence prevention and gun safety measures. It is 3:18 on Wall Street as we speak, and we are under 40 minutes, just about 40 minutes, away from the market close. Let's get an update from Charlie Pellet. Hey, Charlie.
Well, hello there, Tim. We've got, as you mentioned, just about 42 minutes to go with the Dow, the S&P, and NASDAQ, all advancing. S&P right now up by 0.4%. And for the very latest on the markets, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bailey Lipschultz.
Good afternoon, Charlie. As you said, stocks have turned higher in what's really been a choppy session. The Dow is up 60 points, S&P higher by 20, with the NASDAQ rising 135 points. The U.S. 10-year yield is at 3.07%, and small caps are little changed. 7 of the 11 main S&P sectors are trading higher, led by gains for utilities and healthcare, while energy and materials are providing the biggest drag. NASDAQ biotechs rise 115 points, transports are up 65, semis drop 1%, while the VIX is higher by 1.5%. Leaders in the Dow, Salesforce, Merck, and Walmart, while Caterpillar, Chevron, and Dow Inc. are the worst performers. On the earnings front, Rite Aid jumped after boosting its revenue view, and FactSet climbed after quarterly results topped estimates. In other news, Smith & Wesson led a rally in gun stocks after a Supreme Court ruling on New York gun limits, and small-cap biotech Unicure is up 25% after gene therapy data. Wrapping things up, look for earnings from FedEx after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
Okay, we thank you very much, Bailey, to hear live. Breaking news over your Bloomberg Times Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, Juul's e-cigarettes have been ordered off the market here in the U.S. The FDA is saying in a statement today that Juul must stop selling and distributing the products, and that those that are on the market must be removed or risk enforcement action. The FDA, according to FDA Commissioner Robert Califf, a rise in teenage use of vaping products had compelled the agency to conduct a thorough review of e-cigarettes. We've got a great voice on this. Lauren Etter is projects and investigations reporter for Bloomberg News. She's also the author of the fantastic book, Devil's Playbook, Big Tobacco, Juul, and the Addiction of a New Generation. Lauren joins us this afternoon on the phone from Los Angeles. Lauren, you've done so much reporting that has led up to this moment from the FDA. How did we get here?
So, yes, this has been a long time coming for Juul and really has been a wild card for the company. About 2 years ago, the company first submitted its application to receive marketing authorization from the FDA, and they were essentially banking on getting this. And the FDA, in a very surprise decision, ruled against the company and said the company didn't provide enough evidence to support its application and has, as you said, decided to take it off the market. This is a huge blow for Juul. It essentially could be the death penalty for the company. If the company has said that they're likely going to appeal the decision, but 95% of Juul's market is in the United States. Only 5% is overseas. So it effectively really pulls the carpet out from underneath a company that just a few years ago was valued at $38 billion and was considered a unicorn in Silicon Valley. So this is a huge change of course for the company and is really devastating for the company.
So, Lauren, a potential death blow. But like you said, I mean, this is a long time coming for Juul. Has the company been preparing for this at all? Or, you mentioned that they're going to appeal this, but how can they try to move past this, if at all?
Well, really, it's left to the agency and the courts at this point. The company has a few options at its hands right now. They're probably going to seek a stay so they can continue selling their product. They would likely potentially seek an appeal before the court. So really, they do have options before them, but they're not great options for the company that's looking at right now, as of today, not being able to sell any of their product in the United States.
Lauren, does this get kids to stop vaping? It's a big focus of what you wrote about in your book, The Devil's Playbook, Big Tobacco, Juul, and the Addiction of a New Generation. It was excerpted last year in Bloomberg Businessweek magazine. We had you on the program talking about it, and because there are other vaping companies out there.
Yeah, it's a really interesting question. Certainly, Juul is largely responsible for sparking this youth epidemic and nicotine use and nicotine addiction. But over the years, partly because Juul has taken measures to kind of pull back in its social media marketing and it doesn't market on social media, and removed all of the fruity dessert flavors. So a lot of the kids did indeed move to new products, and they moved to products like Puff Bar, and other new ones are popping up every single day. So it certainly does not remove the immediate threat to kids in terms of adopting a new nicotine addiction, and there are plenty of products out there for them. But it does take away the company that made the original sin, if you will, by marketing its product to teens. Mm-hmm. And in a way, it's hard not to think that the FDA is punishing the company for its role in creating the youth nicotine epidemic. So youth usage in nicotine products has gone down over the past few years, partly due to the pandemic. But there are host of products out there that are left on the market, and the problem of youth nicotine addiction is not going to go away anytime soon, and is not going to be solved by removing Juul from the market.
Lauren, just in the 30 seconds that we have left with you, before before the FDA stuff years ago, this was seen as a safer alternative to smoking. Is it in fact safer? So what does this mean for I guess my question is, what does this mean for people who do smoke?
Well, certainly, almost anything is safer than a cigarette. It's a pretty low bar. Cigarettes are known to be deadly and kill millions of people every single year. So essentially, it does remove an alternative for smokers today. But as the FDA pointed out in its decision, in its press release today, there are other products that the FDA has in fact authorized. So there are other products that smokers can go to. They just can't go to Juul.
All right, there you have it. Lauren Etter, Projects and Investigations reporter for Bloomberg News. She joins us on the phone from Los Angeles. She's the author of The Devil's Playbook, Big Tobacco, Juul, and the Addiction of a New Generation. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld were live in the Bloomberg Interactive Broker Studios in New York. Revlon shares down 14%, but that's just today because in the last 6 trading days that ended yesterday, Revlon shares spiked 600% before retreating 14% earlier today. We're going to get into what's going on with Revlon and why it looks like a return of like the retail army that we talked about more than a year ago.
Feels like a long time
What was happening
ago.
with Hertz. We're going to do that in just a minute. First up, though, let's go over to Charlie Pellet because we got less than a half hour to go before the close.
Indeed, and we're getting a makeover. At least the Bulls are today.
I like
Sentiment.
that, Charlie.
Well, here's what's going on with 28 minutes to go. The Dow, the S&P, NASDAQ, all looking pretty right now. With the S&P up 29, higher by 0.8%. The Dow up 130 now, up 0.4%. The NASDAQ Composite Index up 158, higher by 1.4%. Year to date, worth pointing out that NASDAQ does remain lower by 28.3%. The S&P year to date is down by 20%. 10-year yield right now 3.08%. Spot gold down $11 the ounce, down 0.6% to $18.26. And West Texas intermediate crude down 1.9%, 104.20 a barrel. But the bigger energy story today is what's happening with natural gas, plunging right now. Nat gas down 9.2%, 6.22 per million BTUs. Weaker than forecast data and a renewed hawkish tone from Fed officials, ratcheting up worries that the economy is heading for a recession. Olive Garden operator Darden Restaurants reporting fourth quarter sales that beat Wall Street expectations as consumers resume dining out, even as inflation eats into discretionary spending. Darden shares, they are down now, actually turning around. Darden, DRI on the ticker, up now by 0.3%. As for what that Darden report might suggest about the strength of the consumer, Jennifer Lee is at BMO Nesbitt Burns.
We say this all the time. You can never, ever underestimate the U.S. consumer. Obviously, they're under pressure from these high prices, from record gas prices at the pump. But at the same time, the fact that the job market remains very tight, the fact that people are still getting a regular paycheck, which I think speaks volumes for all of this, and then they still have, a little nice tidy pile of savings that they can fall back on.
Nike shares are higher. Nike is leaving the Russian market entirely after suspending operations in March. Nike right now up by 2.9%. After the bell, we check in with FedEx. FedEx shares down now by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as I mentioned, Revlon shares down about 14% right now. This, though, after spiking 596% in the 6 trading days through Wednesday before retreating earlier today. The surge making little sense to professional traders, at least that's what Jeremy Hill and Claire Ballantyne write, about the retail army defying bond logic to drive Revlon stock 600% higher. Claire Ballantyne is personal finance reporter for Bloomberg News. She joins us on the phone from New York City. Claire, Katie and I talked about this earlier this week because this has been something that, as you and Jeremy wrote, has been going on for a few days since Revlon did declare bankruptcy last week. I wonder, though, if this is a return to what we saw, almost 2 years ago with Hertz and what we saw with other retail traders thinking they could make a quick buck on some of these wild moves in bankruptcy.
Yeah, it's pretty remarkable in how closely it resembles the Hertz saga from a couple years ago. And I think it's especially remarkable given that markets have done so poorly, as we've all been talking about for the past few weeks. Retail traders across the board have been really suffering, and yet here they are back again, piling into this little stock and really boosting it. So, it almost seems like maybe this is the one bright spot that they're trying to find, or that there is some life left in, Wall Street bets and some of these Reddit forums.
There's a line in here that I love. In a moment that stunned bond traders. And bond traders are supposed to be smart And I just picture this like old man with a monocle just flabbergasted at his computer screen. But I am curious, you know, you mentioned that this is a lot like Hertz in a lot of ways, what's happening with Revlon, but what are some of the differences?
Yeah, so I'd say the move from Reddit is similar to Hertz. Other than that, there are a lot of differences. So in the case of Hertz, it was sort of one of those companies that had really gotten hit hard by the pandemic, was just sort of having some more short-term pain, went bankrupt, and then ultimately the Reddit crowd was vindicated. You know, the Hertz creditors were repaid in full, stockholders got a payout, and a lot of that attributed to demand for used cars really shot up. And then also travelers started hitting the road again as they got vaccinated. There was also a bidding war. So that was sort of unusual. And despite the similarities in what Reddit traders are doing, Revlon is not in the same boat. It's, had declining sales. It's struggling with a heavy debt load. I mean, I was thinking about this myself. Katie, when was the last time you bought any Revlon makeup? I don't know if I ever.
Oh, absolutely not. I go straight to CVS.
Really?
Yeah.
They don't have Revlon.
Where do you
at
get your
CVS?
makeup?
It's funny. It's a funny question that you asked me, Katie and Claire. I don't know if you want to know, but I'm part of the problem.
Yeah.
Look,
Are you?
yeah, I am. I wear makeup because we do TV, and but I ordered from one of those companies that's like big on social media, and it's like,
Wait,
so
where do you get your makeup?
I think we don't need to talk about it.
Okay. All right.
But it's like one of the competitors that Claire is citing in Revlon's demise over the last few years.
Are you blushing?
Why
or
is
that
everyone
just
in the
blush?
control room just laughing at me right now? I just see them just busting up. We got Ari, we got Paul, we got Catherine just laughing at me.
We
Katie,
do,
just go ahead.
We do
Can you
have
ask
a
Claire
minute
a question?
left. Claire, your name is on the byline, which means there's some great reporting in here. Tell us about some of the people you spoke to. Justin Brain, for example.
Justin Brain was one of the most interesting people I've talked to in a while. And so he decided to buy $40,000 worth of stock. Can you imagine just one day deciding to buy $40,000?
I was like, who does that?
I'm not that liquid.
Right. And so he just thought that, what he said to me was, I'm a 37-year-old man and even I've heard of Revlon. So this company can't be dying. This is, one of those classic American companies. This is a chance to get in early. And so far, he's made a lot of money off of it.
But it wasn't an easy path to get there.
No, it's definitely a big risk that he's taking here. So we'll see what happens moving forward with his money.
All right, Claire Ballantyne, personal finance reporter at Bloomberg News. Claire, thanks for being a good sport with Katie just poking me about my makeup use and wear. Really appreciate you taking the time. Retail Army defies bond logic to drive Revlon stock 600% higher. That's how much it rose in the 6 trading days that ended yesterday. Shares of Revlon this afternoon down just about 14%. Let's now go to Washington, D.C. for a check of the latest world and national news. And for that, we go to none other than Nancy Lyons. Hey there, Nance.
Thanks, Tim. Today's hearing from the House January 6th Select Committee is looking at the pressure placed on the Department of Justice by then-President Trump. DOJ officials who pushed back against Trump's efforts to use the agency in his effort to overturn the election are testifying. Committee Chair Benny Thompson started things off.
We will show that Trump's demands that the department investigate baseless claims of election fraud continued into January 2021. But Donald Trump didn't just want the Justice Department to investigate. He wanted the Justice Department to help legitimize his lies.
Chair Benny Thompson says Trump asked the department to send letters to 6 legislatures urging them to consider altering election results. New York Governor Kathy Hochul is among those upset with a Supreme Court ruling today, allowing guns to be carried outside the home. The decision strikes down New York's concealed carry law that required people show a special need to carry a gun in public. Hochul says a dark day has come.
Frightful in its scope of how they are setting back this nation and our ability to protect our citizens back the days of our founding fathers.
Governor Hochul calls the decision not just reckless, but reprehensible. Michael Bloomberg, the founder and majority owner of Bloomberg LP, donates to groups that support gun control, including Everytown for Gun Safety, which submitted briefs in favor of the New York law. The FDA is banning the sale of Juul e-cigarettes, including those already on store shelves. Agency officials say a rise in teenage use of vaping products is what prompted them to deny authorization for the company to sell them. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, I want to talk a little bit about what's going on with IPOs, because here in the U.S., not so much.
It's a trickle.
It's a trickle.
Yeah.
Wow, what a difference from last year, right?
It was a flood.
It was a flood. Well, so what are the U.S. banks doing to try to make up for the trickle and where they can find a flood? Well, top U.S. banks, including Citi and J.P. Morgan Chase, are whisking fund managers off to the Middle East's booming IPO market to meet the flood of companies looking to go public. That's according to people familiar with the matter.
And these people, they also said that Bank of America and others are considering organizing so-called reverse roadshows for investors. You have investment giants BlackRock, Fidelity, as well as hedge funds, among those to have either participated in the trips or have made their own visits, again, according to reporting from Bloomberg News.
Okay, so roadshow. It's when, back in the day, let's just use Mark Zuckerberg as an example for when his company went public back in, I believe, 2012.
I think it was 2014. No, it was 2012.
Okay,
You're right.
back in 2012. Before that, I remember he put on a tie and jumped on a private jet and whisked his way around the country to meet with people.
He must
this was
have
the
hated
roadshow.
that
He
tie.
did. That's what everyone was talking about. He had to wear, this tie that I think he probably, he used to do these year-long goals where he would only, did you know that he only ate his own meat that he killed?
I had
one
no
year?
idea what you were going to say there. No, I did
He
not
would
know
write
that.
a letter every day. He learned a new language one year. I don't know if he still does these goals.
That's cool.
And one year he wanted to wear a tie every year. So I don't know if that, I think that
Every
was before,
day for a year?
Yeah, every day for a year.
Ew.
I don't know if that counted
I think
Saturdays
it's great
and
that I
Sundays.
go for a run every single day. I don't know.
Yeah,
if I could...
but do you change that goal every year?
No.
So Mark Zuckerberg used to do that, but I'm digressing here, okay? So
Bring us back.
Bring us back. So this reverse roadshow is when the banks go out and they go on the road to try to court companies that potentially could go public to make up for the drought here in the United States. Check the story out on the Bloomberg Terminal and Bloomberg.com.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Best level of the day right now. 13 minutes to go ahead of the closing bell with the S&P up 37, a gain of 1%. The Dow up 187 now, up 0.6. NASDAQ up 186, up by 1.7%. 10-years up 17.30 seconds. 10-year yield 3.09%. Treasuries are rallying as weaker than forecast data and a renewed hawkish tone from Fed officials ratchets up worries the economy is heading for a recession. Spot gold down $11 the ounce, down 0.6%. Bitcoin, 20,812, up by 4.8%. West Texas Intermediate crude oil trading lower by 1.9%, 104.15 a barrel. Natural gas down 9%. Nat gas at 623 per million BTUs. The Fed will release results of its latest bank stress test today after the close of trading. Among some of the major banks, they're all lower for the most part. J.P. Morgan Chase, for example, down 1%. Citigroup down 2%. Wells Fargo down 1.9%. Bank of America down 1.6%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
In the chaos of Latin American politics, Colombia has in recent years looked like an island of stability. Now change is certain. On Sunday, voters elected leftist Gustavo Petro, a former guerrilla, as their next president. Petro should learn from the experience of other anti-establishment leaders in the region. Without broad support and an eye on public finances, he won't be able to deliver the improved living conditions that voters demand. And Colombia, which lost its investment-grade status last year, has little room for error. Although its economy has made a good recovery from COVID-19, deep-seated problems remain. A botched tax reform last year led to weeks of violent protests, and inequality is pronounced even by the standards of the region. Petro would do well to seek out experienced, technocratic advisors who are prepared to meet the country's challenges. Populism alone is no remedy for Colombia's ills. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we go. Under 9 minutes to the close of trading on this Thursday afternoon. We're very pleased right now to be joined by Rebecca Corbin. She's founder and CEO of Corbin Advisors, an investor research advisory firm. She publishes quarterly research on investor sentiment and market trends. She joins us this afternoon on the phone from Farmington, Connecticut. Rebecca, how are you?
Hi, Tim. Doing great. Thank you for having me.
Okay, I'm glad you said you're doing great because, I want you to do well and I want you to have good sentiment. And sentiment is what I'm focused on here because your research kind of says the opposite.
Well, you all have to take this into consideration of the bigger picture. And I agree. The sentiment from the investor base is not positive. It shouldn't be a surprise, however. We've been reporting downbeat sentiment since the third quarter of last year. It was really when inflation and supply chain spooked investors. They've been talking about it, by the way, since December of 2020. And so here we are. And it's a slow movie that we're watching that I'm afraid won't have a happy ending, but everybody is pretty understanding that it's not going to be positive. And then we'll spring back, Tim and Katie.
And I mean, it's interesting if you look at what's expected out of the upcoming earnings season, even though you have like this kind of horrible sentiment, both in consumers, among companies, we're hearing a lot of warnings about supply chains and dollar strength taking a toll on margins, but still, it looks like analysts have yet to make deep cuts in forward earnings projections, at least on the S&P 500 broad benchmark level. Does that have to change?
No, I think analysts are typically more reactive to times like this when things are moving extremely fluidly. This is, day by day, we are seeing more and more fuel added to the fire. Gas is very expensive. And so what we're seeing is uncertainty. Investors don't like uncertainty. We came out with earnings guidance. For the first time in 6 quarters, we saw a dichotomy of performance from companies, right? We've all been in this super cycle, this CapEx super cycle, very similar performance in terms of, through COVID, through 2021. And it wasn't until last quarter where we started to see companies really break out, companies increasing guidance, companies maintaining guidance, companies lowering guidance, and specific sectors actually being impacted by the inflation very significantly, by housing prices, et cetera, and specifically the Fed's actions to tame inflation. And so we're going to continue to see that. And it's very uncertain with regard to which industries are going to be impacted and which companies are going to be impacted when it's been very clear for investors. And so our call is that it is going to be very choppy through the remainder of the year. And then when we get to January 2023, when companies have to reset the bar with expectations for that particular year, I'm hopeful that we'll have a lot more clarity, good or bad, with regard to where the economy is going to break. And the thing about investors is that they just need certainty. So even in a challenging economic backdrop, if they have certainty with regard to what to expect, the equity markets will decouple from the economic performance.
Rebecca, help us and our listeners understand how you come about this research, because you write in our notes that we got from our producer, Paul Brennan, that nobody you surveyed are expecting a raise in annual guidance. And I wonder how you get that research, how you get that sentiment, and then how that's different from other quarters where you've conducted this research.
Absolutely. So for the past 14 years, and how I started my company was surveying institutional investors every quarter heading into earnings season. We typically are surveying about 80 to 100 investors globally. These are institutional investors, professional investors around the world. And we have a series of questions that we pose to them with regard to earnings, guidance, the economy, regions that they're expecting. By the way, it's available on our website, CorbinAdvisors.com, under our research. It's free to the public. We do this because we feel it's a positive thing to do to help corporations understand what the sentiment is for them to prepare, as well as investors to help them have companies that are acting in best practice standards. And so we will be publishing our research, which I'm giving you a sneak peek of today, on July 14th. Investors are draconian. They are way ahead of where corporate realities are, okay? And we don't know how many quarters ahead, but when we have conducted research ahead of cycle changes, recessions, et cetera, it can be anywhere from 12 to 36 months in advance of investors feeling very concerned and skeptical and deep angst around what they believe is going to happen. I can tell you that companies are still seeing growth. We still will have companies that report very strong case in terms of organic growth and EPS. Cash flow is likely to come under pressure, but investors cannot fathom and really have built a wall of perception around the bottom, which in order for them to get over that, unfortunately, we have to deliver on that. And companies are not prepared to deliver on that because that's not what they're seeing. So we're in this very choppy water where investors are predicting things to come. And you and I do not have a crystal ball, but none of the data looks positive. And it does look like we're heading in that recessionary environment period. But it is taking some time for that to have an impact on corporate earnings and corporate performance. Right. And we are still going to see strength.
Rebecca, what surprised you about this latest round of research and your findings?
I think it's very interesting how draconian investors are with regard to, hearing companies come out and say they still are seeing strong demand, they still have record backlogs. Now, let me be clear. Companies are going to come out. They have become more cautious. Fourth quarter, they were more cautious from third quarter. for sure in the first quarter, they were more cautious than the fourth quarter, and we're going to continue on that trend, which is fueling the angst of investors,
Right.
which is why January 23, is going to be that time where we can reset these expectations. But it's a very interesting slow roll. And what I'm very fascinated around
Right.
is, how companies are going to change their capital
Mm-hmm.
deployment strategies, because we've been on a very serious, massive CapEx program, and that's really what's been fueling the economy. And I'm interested to see if companies pull that
Right.
back. I'm also interested to see
Rebecca,
how many companies are announcing layoffs.
We unfortunately have to run one of those layoffs from Netflix today, 300 people according to Variety. Rebecca Corbin, founder and CEO of Corbin Advisors, joining us from Connecticut. Coming up, it's our countdown to the close. We're going to take you to our TV team for our simulcast. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here. Taylor Riggs is here. Shanali Bassick in for Caroline Hyde. We're counting you down to the closing bell, and here to help take us beyond the bell. It's our global simulcast. We're joined right now by Katie Greifeld in for Carol Master, Tim Stenovic in for Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. Tim, a lot of buying here into the close.
A lot of buying, and it's interesting because we just chatted with Rebecca Corbin over at Corbin Advisors, and she's not looking at today necessarily. She's looking at the big picture. Every quarter, they survey 80 to 100 institutional investors, and the results of the quarterly research that's going to come out in July, she gave us a sneak peek of it. The sentiment is really, really low. She's essentially saying that none of those surveyed are expecting a raise in annual guidance, and that sentiment is downbeat. The management tone is increasingly bearish following inflation and slowing growth. So what's going to happen when we start to hear from these companies in a few weeks?
So a bad feeling, but a lot of late day buying, which is interesting because if we think back to where we were 24 hours ago, we saw the opposite. You saw stocks dive into the close, but today on what looks like to be some healthy volume, late day rally.
All I would say is we just had Jonathan Golub on here, equity strategist for the U.S., runs the quant team over there. And I don't want to call him a perma-bull, Romaine, but he says from all the indicators that his quant models are showing him, things have not started to roll over yet. You're not seeing dispersion within the earnings estimates.
Yeah.
You're not seeing huge bankruptcies despite a little bit of a widening of the credit spreads. All of those signals would tell you that a recession isn't anywhere close.
Yeah, and I mean, look, maybe that's what people are betting on today. I mean, they heard what Jay Powell had to say. You saw this rally, the big rally that we had on Tuesday. That rally sort of extended into Wednesday. It faded as we got closer to the closing bell, but now a resumption here on this Thursday afternoon. The Dow Jones Industrial Average higher by almost 200 points, up about 6 to 0.7%. The S&P 500 higher by about 35, 36 points, up about, well, we'll round it up to about 1%. The NASDAQ Composite going to finish the day higher by about 1.6%. And even some of those cyclical names getting in on the action. Some of those small cap names, the Russell 2000 higher by 21 points or 1.3% here on the day.
On the S&P 500, we saw 336 stocks move higher and 166 stocks move lower, Shanali.
Yeah, and it's so interesting. If you take a look at what the sectors are doing here, Tim, you are not seeing everything in the green. You are seeing some sectors rise 3% or more. Consumer staples getting a bid, retailing get a bid, utilities getting a bid here. I do want to talk about the decliners here because energy, the most loved sector of the year, declining here more than 4%, and banks about 1.6% on a day where we will see stress test results come out today and capital plans eventually be released.
And before we get there, let's take a look at the gainers because I want to talk about Clorox. It's had a huge rally this week. It's up another 6% today. That's its best day since March 2020. And what's interesting is that it's really not on the back of any real meaningful news. I mean,
yeah, is this supposed to comfort me? That
I was going to say, is this like some sort of signal that we're
I don't know. It's been rallying all week.
Should I go back and start buying masks again too?
Perhaps you should. This is Clorox's fourth straight day of gains. I'm not sure why. You had Wells Fargo actually lower the price target on this stock on Tuesday, but still a big rally. Again, Clorox up 6% today. Who knows? But let's also talk about Lennar because it's also up for a fourth day. We all know that the home builder reported earlier this week. It has started trimming prices in some areas of the U.S., but overall, it beat expectations, and traders clearly still jazzed about it because Lennar rallying another 4.5% today. And I want to end with Whirlpool because Goldman Sachs, it cut its price target on this stock from $235 to $202. That's still 30% or so increase from where we are. And Goldman maintained their buy rating on this stock. That may be why Whirlpool rose 7% today.
Yeah, we should point out FedEx earnings are crossing the wire right now. The company coming out with their fiscal fourth quarter numbers, adjusted EPS for that quarter coming in at $6.87. That's right on the nose of the average of analyst estimates surveyed by Bloomberg. Revenue for the quarter coming in at $24.4 billion. The street was looking for 24.57, so a little light there, but all in all, pretty much not far off. Here's your forecast: 2023 fiscal year adjusted EPS, the range 22.50 to 24.50. The street was looking on average for 22.36. The company also says that its 2023 capex spend is going to be at about 6.8 billion, which is right around what the street was looking for. So all in all, most of these numbers look to be relatively in line with what the street was looking for, and you're seeing the shares in the after hours bouncing a little bit higher here, up right now 4 to 5%.
All right, let's talk about some of the decliners, Romaine. You went through the numbers there with FedEx, and investors obviously optimistic in the after hours after getting those numbers. Pessimistic about some of the companies that I featured today, specifically United Airlines, finishing the day down by 2.5%. The company is going to temporarily cut about 50 daily flights out of Newark as it looks to ease congestion during the busy summer travel season. I'm set to fly out of Newark tomorrow. Fortunately, my flight hasn't been cut yet.
Cross your fingers.
But I got some bad news because Newark has for years been one of the most delayed airports in the nation.
I mean, who flies out of Newark? What's going on there, dude?
You guys do we have time for a quick story? When I got married 5 years ago, a bunch of people from the East Coast weren't actually able to get to my wedding because all their flights were canceled. So those rock stars drove across the country.
You have better friends than me.
All for the Tim Senovic wedding.
A lot of them were family, so they kind of had to do it. That's what they told me when they arrived, after 14 hours in the car. Airbnb finishing the day down by 3.8%. Shares fell after Morgan Stanley cut its price target, not just on Airbnb, but some other travel stocks. Those included Booking Holdings and Expedia Group. This is interesting. Morgan Stanley is concerned that it's cautious about travel demand moving forward. So if people are paying so much for airline tickets and for gas and for other expenses that are going up because of inflation, are they going to be traveling less? Morgan Stanley certainly thinks so. And here's one that's not based on any fundamentals. Revlon finished the day down by 11.5%. As of yesterday's close, it was up close to 600% in the previous 6 trading sessions. Kind of the return of the retail trader meme stock, kind of what we saw with Hertz back in the summer of 2020, with investors hoping to make a quick dime there.
Let's take a look at full faith and credit, Tim, because it certainly was a risk-off mode, well, risk-on mode, I should say. But what's been so interesting is sort of the correlations that we've been looking at lately. And of course, today that breaking down, buying both into bonds and equities. I've been focusing a lot on the 5 end of the yield curve, the belly. That's where a lot of the movement ones. There was a huge sort of tips auction, Tim, that happened earlier today, and that actually did pretty well. And so you are seeing some buying come in, and you do wonder if that signals maybe peak in yields as you're starting to get some demand there, which frankly, you haven't seen these types of yields since about April of 2019. Further down on the yield curve, you're still getting some movement. And I think, Romaine, what this signals to me is I'm not sure what cues to take from a bond market. Yields have been falling significantly for the past few days.
Yeah, and I want to quote somebody. For some reason, I can't remember exactly who said this, so forgive me for stealing this. But I was talking about this idea that we're sort of past this sort of stage of sort of a binary outcome here when it comes to economic conditions as well as market conditions. And that's why you kind of see these swings back and forth. Everyone's sort of looking for that sort of binary proposition, but it's just not there. I mean, whether we're headed for a recession or not, that's not really the question. The question is sort of what economic conditions look like over the next, 6 to 12 months, and how companies are going to be able to adjust to that, how consumers are going to be able to adjust to that. And if you ask 10 different people that question, you're going to get probably 12 different answers.
And I think that really speaks to sort of the market action that we've been seeing. I mean, if you look at this S&P 500 up strongly today, but those gains could easily disappear tomorrow. I mean, there's so much intraday volatility, and I think it all comes back to that question of what is this going to look like? And there's not a really neat and tidy answer.
It's interesting, Katie, because when you think about volatility, of course, I watch it super closely because it has so many ramifications to the market more largely. The VVIX, so volatility is actually down a little bit on the year. Looking for some positive signals there because, of course, there is a point where volatility starts to get worse for everybody, right?
Yeah, I want to go back to what Romaine said about the possibility of a recession and speaking to, 10 or 12 different people and getting 10 or 12 different answers here. One thing that we can't forget is a recession is a normal part of an economic cycle.
Yeah.
And the question is it's not just the policy response to a recession, but it's how deep that recession is and how long that recession is and what the recovery from that recession looks like. Because if that recession, results in, only a couple percentage points of gains of unemployment on the unemployment rate, then that's not a very deep recession given where we are when it comes to the number of people.
And we're
in the US
focusing
who
a
are
lot
employed.
here on the U.S., but real quickly, though, I do want to go back because one of the most read stories on the terminal today is actually the commentary that we heard out of Robert Habeck he's the economy minister in Germany, and he was talking about the big disruptions, of course, from the Ukraine war and the flows of natural gas into Europe, specifically into Germany, and he's now drawing a lot of parallels to the Lehman collapse and the idea that there is systemic risk, real systemic risk out there, real contagion risk out there from what's going on in Europe, and the idea that it wouldn't be contained to just Europe, just Germany, that it could actually become a global issue, including for the United States. I'm not sure I buy that, but I do think, he's a lot smarter than me. He probably has a lot more degrees than me. So maybe he's seeing something that the rest of us maybe haven't quite come to terms with.
Just to quickly pick up on what you said about contagion risk, I know that here on TV we'll be following a little bit of those stress tests when you think about the lack of systemic risk that maybe those now pose relative to 2008 and the calmness perhaps that comes from some of those stress tests unlike maybe 10, 15 years ago.
Yeah, we'll also be bringing you the results of that stress test later today when we do hear
on radio.
Yeah,
that'll be interesting. Maybe we could compare later who did it better.
That'd be fun.
Yeah, that sounds good. Yeah.
They have me today.
That's true. We do have Shonali helping break it down. Not us on radio. We got Katie today helping out. That is going to do it for our cross-platform coverage
like a stress
today.
Test ETF or something that Katie's covering?
Soon,
okay.
Probably. There's probably a
I want the inverse of that. How about that? Triple leverage.
Triple leveraged inverse. We'll make it happen.
All right. Stay tuned because tomorrow, same time, same place, you're going to catch us again for our simulcast of Beyond the Bell on Bloomberg TV, radio, and YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld live in the Bloomberg Interactive Broker Studios in New York. The Dow finishing the day higher by 0.6%. The S&P higher by 1%. The NASDAQ higher by 1.6%. To Washington, D.C. we go for a check of the latest world and national news. And Nancy Lyons. Hey, Nance.
Thanks, Tim. Lawmakers on the January 6th Select Committee are hearing from Department of Justice officials who say then-President Trump contacted them daily to press for evidence of election fraud. Jeffrey Rosen was the acting attorney general at the time.
The common element of all of this was the president expressing his dissatisfaction that the Justice Department, in his view, had not done enough to investigate election fraud.
Jeffrey Rosen says the department declined all the requests from the president because he says they were not appropriate. The Supreme Court has struck down a New York law that required people to show a special need to carry a handgun in public. We get more from Bloomberg legal analyst June Grasso.
Up until this point, in a decision written by Justice Scalia, very conservative, you could have a gun in the home, but this takes it another step, a big step.
Bloomberg Law host June Grasso. President Biden is weighing in on today's
connection lost.
Bloomberg Washington correspondent Joe Matthew.
He is deeply disappointed, his words in this ruling, saying that it contradicts both common sense and the Constitution and should deeply trouble us all, he says. The president goes on to urge states to continue to enact what he calls common sense laws to make their citizens and communities safer.
Bloomberg's Joe Matthew. Michael Bloomberg, founder and majority owner of Bloomberg Radio, parent Bloomberg LP, donates to groups that support gun control, including Every Town for Gun Safety, which submitted briefs in favor of the New York law. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld were live in the Bloomberg Interactive Broker Studio in New York. Katie, you heard me mention that shares of United closing lower today by just about 2%. This after the company said it was going to temporarily cut about 50 daily flights out of Newark Airport as United looks to ease congestion during the busy summer travel season.
Yeah, I don't know, it's kind of backwards to me how this would ease congestion. It just makes it sound like the existing sites would be more terrible, but in any case, the change, it's effective July 1st. It's going to affect about 12% of United's flights from Newark. The carrier sought a waiver from the FAA following several weeks of irregular operations in Newark caused by many factors, including airport construction.
Okay, so construction, that's important, but also what else is happening at Newark and has been happening for years? High demand.
Right.
Remember, it's the hub for United Airlines here in the New York area. Limited runways, packed airways. It's also, gosh, in the summer, the weather.
Yeah.
Just, it's this domino effect. So I've had so many flights.
Yeah, tell me about
I've
it.
had so many, like I said on TV just a few minutes ago, everything out of the New York City area was canceled during my wedding. So people who were able, just because of weather.
Oh, weather.
Yeah, I had a friend travel from Cape Town, South Africa,
Oh my gosh.
and he wasn't able to get from New York City to Cincinnati for my wedding. He was stuck in New York. The good news was,
Did he drive from Cape Town, South Africa?
no, he flew from probably Cape Town to Joburg to the U.S.
Okay.
So he got here, and fortunately, we weren't at our apartment because we were off in Cincinnati getting married. So Neil just stayed at our apartment, took care of our cat.
So he did not get there?
He didn't get there. He came all the way from South Africa, but because the flights were canceled, he wasn't able to make it to our wedding. My aunt and uncle, my cousins, my grandma, who I think she was probably 95 at the time, she drove all the way there.
Wow.
They rented like 3 or 4 cars.
I got married in New Jersey, so it wasn't a huge problem.
No issue there.
No.
You're listening to Bloomberg Radio. Tim Stenefik and Katie Greifeld. We're live in the Bloomberg Interactive Broker Studios here in New York.
February 6th. This is how the process works. The ultimate arbiter here, the ultimate.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. FedEx delivers. FedEx forecast annual earnings above analyst expectations and posted quarterly profit that matched estimates as the courier benefits from higher package prices and resolves some operating snags tied to the labor shortage. After hours, FedEx shares up by 3.5%. An update on Wall Street stocks closing very close to session highs. 35-point gain today for the S&P, up by almost 1%. The Dow up 194, up 0.6%. NASDAQ up 179, a gain of 1.6%. Stocks moved higher. Treasuries rallied after another batch of economic data fell short of expectations, ratcheting up recession worries. Equities advanced as the decline in yields made stocks relatively more attractive. 10-year yield 3.08%. Spot gold down $12 the ounce to $18.25, down 0.7%. And West Texas Intermediate crude fell 1.9%, 104.12 a barrel. Bitcoin now up 5.7%, 21,000 for Bitcoin. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, you might recall last week, and in the most recent issue of Bloomberg Business Week magazine, a story by Michael Smith and Jonathan Franklin. Hell is a cruise ship at the beginning of the pandemic. It's actually an excerpt from the new book, Cabin Fever, the harrowing journey of a cruise ship at the dawn of a pandemic. It's by Michael Smith and Jonathan Franklin. The book came out just a couple of days ago. Michael Smith is projects and investigation reporter at Bloomberg Business Week, and he joins us in person here at the Bloomberg Interactive Brokers studio, usually based in Miami. Mike, good to have you with us. Congratulations on this book.
Thank you very much. Thanks for your interest.
Well, I got to tell you, I read the excerpt in Bloomberg Business Week, and before we interviewed you, I think I asked our producer, were they on the ship during this time? Because reading this makes me feel like I'm reading an account of somebody who was on the ship in the early days of the pandemic.
Yeah, that actually a lot of people have asked me that, and I was quite surprised because I was not on the ship. I've never been on the ship. In fact, I've never been on a cruise in my life.
I haven't either. Are you going to take one now that you wrote this book?
Actually, I am. I have an 8-year-old daughter, and we decided we're going to take her on a Disney cruise in August. Right. Knowing what I know, you could say that's pretty crazy, but
get your booster.
I do. Yeah, I am. We're all vaccinated and everything, and cruises are a bit safer now than I think they used to be, at least against COVID. But no, I started this sort of. I feel like I've been on the ship for the last couple of years, actually, because I started covering that cruise with Bloomberg, first as a news story, because I just found it captivating when it started breaking in the news. And then it turned into a Business Week full-length feature story.
The cruise we're talking about is the Holland America cruise ship, the Zandam. It set sail back before March of 2020. So before we were thinking that the pandemic was something that was going to happen here. Take us onto the ship and the challenges that not just the passengers had, but the staff had.
Yeah, so you're right. The ship set sail just before the pandemic really started shutting down the world. The cruise company, Holland America, just sort of wanted to, make people feel like they were in this fantasy land of a cruise, which is what that's all about. And then, it became a pandemic, and port after port started just shutting down and refusing to allow the ship to dock. So you had a ship out in the middle of the Pacific, way down at the southern tip of South America with nowhere to go, and then people started getting sick. And that's when the drama really, really started.
So how do you even go about starting to report something like that, given that you weren't actually on the ship? Where did you even start?
Well, I started, it was a news story, and I actually reached a couple of passengers who were on the Zandam as it was, as it was at sea and as it was in the middle of this crisis. And I was just captivated by their stories. They just sort of poured their hearts out to me about the terror they were living under, the fears. They were convinced they were all, they thought that it was possible that everyone on that ship was just going to end up dead because they were stranded, nowhere to go, and the story just sort of drew me in. And so from then, I just kept talking to people. We got tons of documents that we looked through, and we sort of could piece together the reality that we were able to do.
Tell us about the captain and the role that the captain took, because there's this moment in the book that the captain comes on the loudspeaker and announces that people on the ship have died.
Yeah, the captain of the Zaandam is a Dutchman named Anne Smit, a career captain for Holland America Line. And he, by all accounts, he is a remarkable individual. He was very transparent. He communicated whatever he could to the passengers almost daily. And he tried to just sort of hold it together. Because when you think about what was unfolding, just the panic that it could have ensued, I mean, he could have had a mutiny on hand. But he was able to hold it together, and it was very comforting sort of constant for everyone on that ship to keep things under control.
So I'm thinking about what the passengers experienced. And again, when I was reading this excerpt from the book in Bloomberg Business Week, it actually brought me back to those early days of the pandemic, because we know so much more now. We have vaccines, we have good understanding of what's going to happen to one of us when we do get COVID and the risks associated with it. But there was this panic, not just among the passengers, but among the crew, because they didn't have anywhere to go, and they also didn't know what was coming.
Yeah, that's absolutely correct. It took me back, and that's kind of what the story evolved into, sort of bringing back those crazy, terrifying early days when you were sort of scrubbing your groceries with antiseptic wipes, worried that you could get COVID anywhere, just sort of freaking out because we really didn't know what this terrifying disease could do. Now, we're vaccinated, there's all this treatment, so, it's kind of strange to think that that's the way it was, but that's the way it was. And so you can imagine that amplified many, many times on a cruise ship where you were just sort of sitting there helplessly waiting for this disease to pick people off one by one. And the crew was especially at risk, actually.
We're speaking to Michael Smith, projects and investigations reporter for Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker studio. And because this week, his new book, Cabin Fever, The Harrowing Journey of a Cruise Ship at the Dawn of the Pandemic, came out. It's by Michael Smith and Jonathan Franklin. When we come back, we're going to speak more to Michael Smith, projects and investigations reporter for Bloomberg Business Week. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld in the Bloomberg Interactive Broker Studios in New York. In just a minute, we're going to get back to our interview with Michael Smith. He's the author of Cabin Fever, The Harrowing Journey of a Cruise Ship at the Dawn of a Pandemic. The book coming out this week. Our conversation with him continues in just a couple of minutes. First up, though, Charlie Pellet, we got some news from the Fed. What's going on?
Indeed, let's sail right into those stress test numbers. Wall Street's biggest banks set to return tens of billions of dollars to investors after all of the lenders passed the Fed's annual test of their ability to withstand market turmoil. Again, the headline on the Bloomberg, Fed says all banks it examined passed this year's stress test. The Fed said the banks examined showed that they had enough capital to handle a cocktail of surging unemployment, collapsing real estate prices, and a plunge in stocks. Lots of news after the bell. Perhaps the most closely watched report came from FedEx, and it forecast annual earnings above analyst expectations while posting quarterly profit that matched estimates. After hours, FedEx shares, they're up by 2.7%. Treasuries rallied after another batch of economic data fell short of expectations, ratcheting up recession worries. Equities advanced as the decline in yields made stocks relatively more attractive. 10-year up 18.30 seconds, 10-year yield 3.08%. S&P up 35, up by almost 1%. The Dow up 194, up 0.6. NASDAQ up 179, higher by 1.6%. Spot gold down $12 the ounce to $18.25, drop there of 0.7%. And West Texas Intermediate crude today down 1.9%, 104.16 a barrel. So an update on Wall Street. Rebecca Corbin is the CEO of Corbin Advisors. Her firm tracks investor sentiment. She was a guest right here on Bloomberg Business Week.
Our call is that it is going to be very choppy through the remainder of the year. And then when we get to January 2023, when companies have to reset the bar with expectations for that particular year, I'm hopeful that we'll have a lot more clarity, good or bad, with regard to where the economy is going to break.
And today turned out to be a mixed day for a lot of the cruise stock names. Carnival Corp up today by 0.3%. Royal Caribbean, it was down 1.7%. And as for Norwegian Cruise Line Holdings, that stock also today trading a little change. So again, recapping here, the Dow, the S&P, NASDAQ all rallied. S&P today up by 1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks, Charlie. Hey, Charlie, when was the last time you went on a cruise?
It has been too long. It was right before Christmas as we moved into the pandemic. Had an absolutely amazing time. I love cruising. I have a great time doing it. And it's great to hear about our guest going ahead and taking a Disney cruise coming up not too soon.
Yeah, you got to go ahead and book that next one, Charlie.
And it's funny because literally this afternoon I was checking out rates. I've got some friends who were supposed to go to Ecuador. No, not for me, but for a friend. The friend, because of turmoil in Ecuador, is not going to be going to the Galapagos Islands. They're stuck in Miami. What are they thinking about doing? Getting on a cruise ship this weekend. I managed to score them a deal for roughly $700. Their kids inside cabin, but that's for a week of fun.
Charlie Pellet, he doesn't just do the news. He's also a travel agent for Friends. Charlie, thanks so much for that update. Let's get right back to Mike Smith. He's the author of Cabin Fever, The Harrowing Journey of a Cruise Ship at the Dawn of the Pandemic. It's a new book. It came out this week. It's co-written with Jonathan Franklin. So, Mike, let's go back to the Zaandam. It's where we are in the story. It's at the Panama Canal. I found this one of the most gripping parts of the excerpt was what actually happened and how it got through there.
Yeah, so the ship got to the Panama Canal like 2 weeks into this cruise, a few days into a shipwide lockdown, and the Panama Canal was sort of a crucial point where if they could get through there, they could finally get home to Florida where the ship was headed. And when they got to the canal, the government of Panama said, "You are not going through here," because they had disclosed that they had COVID cases on board and people actually died. And this is a critical moment because there was nowhere else for the ship to go. And so what happened was Panama, rightfully so, was really concerned about letting any ships with COVID cases through because they were afraid that, for example, the virus would jump from the canal onto shore because it's only like a couple of feet onto shore from the canal, or that the pilots, who are the only people qualified to take ships through the Panama Canal, would get COVID and be put out of action, which would shut down the canal.
These are the people who actually help the ships get
Yeah,
through.
these are the only way.
They can't get sick.
Exactly. No ship can go to any port in the world or go through any place like the canal without a local pilot to get on board and take control of the ship. That's the way it is everywhere. And so if your pilot gets sick and cannot work or, God forbid, dies, you got to shut down the port or the canal. And so that would have been a calamity for the global economy. So Panama was quite concerned about that. So diplomats from the U.S., from the EU, from all these countries started sort of trying to convince Panama to find a way to make this happen. And after like a tremendous amount of trying, they were at a point of no return. They had to find a way to do it. And that was the big challenge that they were facing there.
And while all of this was happening, I mean, the passengers, they had cell phones, they had smartphones, they were on social media, as you write, basically begging the world for help.
That's correct. And that's sort of how I got into the story, because I saw a news story about them at the canal. I was like, this is an incredible story. And I found some relatives of passengers on Facebook, and I actually called a man who was on the ship with his wife in their cabin, and he just spoke to me. He's like, we're a pariah ship. This is the death ship. We're all going to die. Like, it was just a striking conversation that I had with this gentleman, and that's what sort of got me hooked on the story, if you will.
Where does the cruise industry go from here? How did this moment in the last 2 years change the industry?
Well, it was quite calamitous for the industry. I mean, a lot of smaller cruise companies went under. The bigger ones had to sell ships, had to sell, raise money desperately in the markets to survive, because the cruising shut down for a very long time because of COVID. Now they're coming back. They've started, sending cruises out over the last year or so, especially this year. But the volume of cruises is much less than it used to be. There's a ton of people that still want to go on cruises. I mean, it is an incredibly popular way for people to travel, but it's much below the levels of before. So they're just going to have to downsize until they can grow again.
And even after all this, just in the last 30 seconds that we have, you are headed out on a cruise.
I am. My daughter
The
is
first one.
exactly. I'm taking my daughter on a Disney cruise. She's 8 years old, and we just decided, let's go for it. I developed a fascination for cruises after being immersed in this subject. Never been on one before, but I decided, why not?
Why not? Well, you're going to have to give us an update when you get back. And also, working 2 years on this book, you certainly deserve a break. We're talking about Michael Smith's new book, Cabin Fever, The Harrowing Journey of a Cruise Ship at the Dawn of a Pandemic. It's a gripping read. It's available online and at bookstores. And also read the excerpt from it at bloomberg.com/businessweek. Let's go to Washington, D.C. now for a check of the latest world and national news. For that, we go to Nancy Lyons. Hey there, Nance.
Thanks, Tim. The January 6th House Committee this afternoon is hearing about efforts by former President Trump to pressure the Justice Department to embrace and pursue his claims of widespread voter fraud. Bloomberg's Irv Chapman is following the testimony.
William Barr resigned as Attorney General. He was replaced by Jeffrey Rosen, who fielded Trump's demands, including to tell state officials there was evidence of fraudulent voting.
The president either called me or met with me virtually every day. The president expressing his dissatisfaction that the Justice Department, in his view, had not done enough to investigate election fraud.
When Rosen and his deputy told Trump they did investigate his claims and found them untrue, Trump sought to replace Rosen with an assistant attorney general who would do his bidding. Told that mass resignations would result, Trump backed off. In Washington, Irv Chapman, Bloomberg Radio.
The Supreme Court has struck down New York's limits on carrying concealed handguns in public. It's a landmark victory for gun rights advocates, but New York Governor Kathy Hochul says she's shocked by the ruling, especially with the rise in gun violence.
As governor of the state of New York, my number one priority is to keep New Yorkers safe. But today, the Supreme Court is sending us backwards in our efforts to protect families and prevent gun violence.
Governor Hochul says we do not need more guns on our streets. The NRA is hailing the Supreme Court's decision, calling it, quote, another landmark win for constitutional freedom. Michael Bloomberg, the founder and majority owner of Bloomberg LP, donates to groups that support gun control, including Everytown for Gun Safety, which submitted briefs in favor of the New York law. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stenovec and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. Another story about Florida, Katie. We mentioned it a little earlier in the program. It's among the most read. It's by Amanda Gordon, and it's all about Ken Griffin, who has threatened to leave Chicago. He finally is. He's moving Citadel's headquarters, not to New York City, though. He's moving to Miami, leaving his current home of Chicago after the billionaire decried the city's crime rate and voiced frustrations with political leadership in Illinois.
So
what do you think? What?
I'm going to say it again. I'm going to say it again. You know, good luck in Miami in July. I'm sure
Why
he
is it?
won't.
What's Miami like in July?
It's super hot, I would say. Super muggy. Really?
Okay.
I mean,
no, not in July.
Oh, interesting. But
Yeah.
in any case, the billionaire, he's already relocated to Florida with his family. He plans to build an office tower in Miami's business district, so a new building there. And I mean, he's one of several. This is something we've seen out of plenty of high-profile businesses at this point, moving south, specifically to Florida.
Yeah, some really important context here. He's a prominent Republican donor. He's long clashed with J.B. Pritzker, the governor of Illinois. He's become increasingly critical of Chicago. This is Ken Griffin. He once described the city's violent crime, quote, life like Afghanistan on a good day. Still, the move is yet another blow for the third largest city in the U.S. You've got blue chip companies, including Boeing and Caterpillar, already announcing plans this year to leave the state.
And the company and its employees, it's been a significant contributor to the tax base, I believe, of Chicago is what we're talking about. And they've contributed billions of dollars over the past decade. So this is a real problem, I mean, for Chicago, not just specifically Citadel, but this overall trend of businesses relocating, going south, going to Florida.
You mentioned some of the other companies that have gone to Florida. Those include Goldman Sachs, Blackstone, hedge funds like Dan Sondheim's D1 Capital Partners have also moved employees there as well. You're listening to Bloomberg Business Week. Katie Greifeld and Tim Stenovec in New York City, and this is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Wall Street's biggest banks are set to return tens of billions of dollars to investors after all the lenders pass the Fed's annual test of their ability to withstand market turmoil. FedEx forecast annual earnings above analyst expectations. It also posted quarterly profit that matched estimates. An update for the Dow, the S&P, and NASDAQ. We had the S&P up 35 points today. That was a gain of just about 1%. The Dow up 194, up 0.6%. NASDAQ up 179, higher by 1.6%. Treasuries rallied after another batch of economic data fell short of expectations. 10-year yield 3.08%, 10-year up 18.30. Spot gold at $18.23 the ounce, down $14, lower by 0.8%. Bitcoin at $20,902, up 5.3%. West Texas Intermediate crude oil up down 1.9%, 104.15 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Tim Stenevic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio in New York. You're listening to us on the radio, on Sirius XM, watching on YouTube. Katie, I got the IPOX SPAC index pulled up here on the Bloomberg terminal. It reached a high of $940.33 back in February of 2021. Since then, it's down 48%. A lot has changed in a little over a year when it comes to SPACs.
Yeah, absolutely. I mean, they were the shiny toy in
Of
the
2020.
Yeah.
Right? It's like the pandemic hit and then boom, SPACs.
Yeah, everything exploded.
Well, let's talk to Mike Ryan about it. Mike is CEO of Bullet Point Network. Mike previously was a partner and co-head of global equities at Goldman Sachs, also an investment committee member at the Harvard Endowment. It's good to have you with us, Mike. How are you?
Great, Tim. Thanks for having me.
I should know you're also board chair of the Alpha Partners Technology Merger Corporation. We want to talk SPACs here. We saw a lot of SPACs being pulled, and we're still right now seeing, pretty much each and every week, a SPAC that has been announced come out and say, no, we're not going to do it, or we're going to return money to shareholders, or we're not going to acquire that target company. What's going on with SPACs?
Well, look, I think the market overall for growth stocks has been very challenging, as you've been talking about here for days and weeks, with more than half of the NASDAQ stocks down more than 50% from their highs, and all kinds of public, well-known, established companies like Netflix and Zoom, also other high-profile IPOs, Lemonade, Coursera, all down about 75% from their highs. So it's pretty natural that the SPAC market, which is primarily catered to growth companies and emerging early-stage growth companies in particular, is also down. Overall, I think it's really a story of growth stocks. Average IPO down 46%, the average SPAC down 49%. Investors don't like losing money, and I think we need to let the market settle. We need to make sure that the companies that come to market through the SPAC product or otherwise are the right companies at the right prices.
So what does due diligence look like there when you're trying to suss out, what are the right companies and what is the right price for that company?
Yeah, that's a great question, Katie. There are a lot of private companies. You probably know there's about 1,150 private unicorns, valued at more than $1 billion. Most of them aspire to be public, and I think over the next 3 to 5 years, you'll see many companies come public. When we look at a business right now, we're looking for the same old-fashioned basic things that have always been important to us. We're looking for a great business. We're looking for something that has differentiated products, a competitive moat around it, and is run by trustworthy and competent management. Ultimately, what we think it's all about is growth and profitability. I think what happened last year in the broad equity market, as well as in the IPO market, as well as in the SPAC market, is people really lost discipline on profitability. And a lot of companies that had no clear path to profitability came into the public market. And I think that's probably not going to happen again soon. I think there are companies that are clearly burning capital and investing in their future, but they need to have real credible path to profitability in order to be well embraced in today's market. And so I think what we're looking for are great companies run by great management with growth and profitability outlooks that we can get behind and that investors will like. And then you have to bring it at a price that makes sense for the market.
What is the advantage of doing a SPAC in this environment?
Well, again, I think many companies want to be public, and they want to be public because they want to have a merger currency to do M&A transactions. They want to have a stock option currency to attract and retain and motivate their team and be able to have a competitive advantage.
But why not just go public, through a traditional IPO or a direct listing?
Well, I think you'll see a lot of all the above. Last year there were many IPOs, regular way IPOs. This year there have only been, I think, 41, and only about 20 of them have been $20 million or more in the regular way IPO market. And so with IPOs, traditional IPOs, essentially down about as much as SPACs, I think the SPAC market down 49%, IPO market on average down 46% through month end. There've been a handful of direct listings. Some of them, the averages there don't matter because there's only a handful of them, but they're down more than 50%. So you really have a phenomena where growth stocks, especially cash-burning companies that don't have a clear path to profitability, have sold off. And I think that's happening for public stocks that have been outstanding for years. It's happening for IPOs, and it's happening for SPACs.
So, Mike, does your view of the SPAC market sort of have to be predicated on the trajectory for growth stocks then?
Well, I think the majority of companies that are looking at going public in any format, including in SPACs, need and want capital, as well as that public currency that I mentioned earlier. I think growth companies are generally the majority of IPOs, and technology in particular, I think, has had a massive positive effect on the world and as a big, enormous segment now of the stock market. So I think you'll imagine that a lot of the IPOs will continue to be technology, healthcare, other segments of growth. But you're certainly seeing SPACs and non-SPAC transactions in materials, industrials. Obviously, energy is a very hot sector now in the public markets and elsewhere with oil prices as high as they are. So you'll see things of all types, but the predominance of IPO activity has been in growth companies, and most of the growth companies have been in technology and healthcare.
So, Mike, what's attractive to you as board chair of the Alpha Partners Technology Merger Corporation?
Well, we're looking for companies that have that special characteristic. They have growth, they have path to profitability, they're run by great management, and frankly, we're lucky because we have a lot of options out there that fit that bill. We also need companies.
Even in this environment, there are a lot of options.
There are indeed. Companies have to stop wanting to go public, Tim. And again, I think over the next 3 to 5 years, you'll see a lot of IPOs and a lot of public listings for these companies. One of the great things about the U.S. capital markets is it's the broadest, deepest pool of money in the world, and having successful public listings is going to continue. You've had so far year to date, I think I just read, the worst start to a year since 1962.
Yeah.
So the stock is really under pressure now, and so I've seen this before. We saw this in 1998. So the IPO market closed completely for a time. We obviously saw this after the dot-com bubble crash. And so you're just seeing normal volatility, and you're seeing a decline in volumes. But I think for the right companies at the right prices, they'll still want to go public, and SPACs will be part of that.
All right, Mike Ryan, we're going to have to leave it there. CEO of Bullet Point Network, also board chair of the Alpha Partners Technology Merger Corporation, talking SPACs. That is going to do it for Bloomberg Business Week. On behalf of Katie Greifeld, I'm Tim Stanovic. A big thank you from the entire team here at Bloomberg Radio. This is Bloomberg.
innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a landmark ruling by a deeply divided Supreme Court opens the door for more people to carry guns in public. This as the country is grappling with a rise in gun violence and companies are trying to get workers back to the office. Plus, he was suspended from Google for voicing concerns about an AI bot he says is a person. My sit-down interview with engineer Blake Lemoine. Why does he think computers have feelings and why does it matter? What does he think big tech should do to deal with it? An in-depth conversation coming up. And continued concerns about the power of big tech. I'm joined by the CEO of Proton, Andy Yen, who's in Washington right now fighting for antitrust reform. All of that in a moment, but first I want to get a look at the markets. Investors looking to tech as fears of a recession grow. Bloomberg's Ed Ludlow here with the latest. Ed, walk us through the day.
Yeah, it's interesting. There's momentum in the technology sector. We're up in 3 of the last 4 sessions on the NASDAQ 100 and up meaningfully. You look at the NASDAQ 100, very tech-heavy index. All of the mega caps on there are up 1.5%. But not all tech created equal. We see weakness in semiconductors, for example. The story of the day on Thursday was this pullback in yields. So much Fed speak. Fed Powell again on Capitol Hill giving his view of the world and the outlook for the Fed, the outlook for inflation and rates, and basically reaffirming his commitment to tackling inflation at any cost, which of course adds to recession fears. So it's interesting. Why is tech up in this environment? I have this chart on the Bloomberg terminal that I've been looking at. I'm trying to look at the tea leaves. There's a lot of mixed messages. It's been a week where we've been up and then we've been down and we're back up again. But we look at this 200-day moving average. In simple terms, very few stocks on the tech sector of the S&P 500